call the meeting to order then. I need a motion to adopt today's agenda.
So moved.
This meeting is being recorded.
So second.
It's been moved and seconded. All those in favor indicate by saying aye.
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 Any opposed? Chair votes aye as well. We also need a motion to approve the minutes from August 5th.
I would make a motion to approve the minutes from August. I'll second it.
It's been moved and seconded. All those in favor indicate by saying aye.
Aye.
Any opposed? Chair votes aye as well. So this is an opportunity for the public to comment on any public matter that is not on the agenda of the meeting and is within the jurisdiction of the Teachers Retirement Board. However, the board may not take action on any issues raised unless it's included on the agenda and public comment has been allowed. If issues are raised that would require board action, the issue would need to be included on the agenda for a future meeting. Public matter does not include disability applications or contested cases or other adjudicated proceedings. We have a public today, so welcome. Does anyone have anything they'd like to say?
Sarah Piper, MFPD. I just wanted to say thank you to the TRS staff who have been traveling around doing Ready, Set, Retire presentations to several districts throughout the state and different regions to try to do some educational outreach. They've got a video presentation that Darla's put together along with I don't know who all else. It's amazing. It's out on the website now if you haven't seen it. It's just a short video clip that helps explain the basics of retirement system. And then people closer to retirement are very grateful for the opportunity to have some more in-depth help and assistance with figuring out all the paperwork and ins and outs of retiring. So thank you to all the TRS staff who's been coming and doing those presentations.
Absolutely.
I wanted to welcome our two board members. Welcome to our board, and we'll get to know you as time goes on.
I just want to say welcome to Madam President. Thank you, Brian Evans. I'm with the Governor's Budget Office here. Usually keenly interested in the actuarial evaluation, so I'm here to listen in. Greetings from Fort Worth to the Capitol.
How did you get here?
All right. Well, then we are on to our actuarial evaluation. Todd, would you like to join us and come on up?
Good. So,
I didn't even see you sitting back there, so.
what,
We've new. All right. Dan, can you hear us?
Sherry, I can hear you pretty well, but when people away from you are talking, I can't hear very well.
Okay, we'll try to speak up a little bit. Welcome, you guys.
Great. Again, for the new board members, my name is Todd Green. This is Brian Hoagie and Joey Walls for the actuaries for the retirement system. I've been coming here since 2009, so it's been a long relationship. Brian is new to the team this year, so he looks young, but he has 18 years experience. So,
and some gray hairs.
and he's been with us for 8 years. He's out of our Omaha office. And really the point is just to add some depth to the team, essentially. And you guys know Joey, obviously. He's been my right-hand man for a long time. So they're going to do the presentation today, so it's going to be an easy day for me. So, so with that, I'll let them start. And again, this is your meeting, so please interrupt if you have questions. Thank you all.
So just for some of the new board members, kind of a recap on what the whole actuarial evaluation is. So what we're doing right now is a measurement as of July 1, 2021, and essentially measuring the assets and the liabilities. So liabilities meaning we're going to pay teachers a benefit, or they're owed a benefit down the road in the future. And to know what that benefit is, we need to make assumptions. We need to say, as the actuary, we're coming up with what their salary increases will be, will they terminate, when will they retire, how long will they live, to be able to figure out what those benefits are in the future. Take all those benefits and we bring them back to a point in time for 7-1, And then we look at what the assets are. So we're accumulating assets to be able to pay those benefits in the future. So when a teacher is hired, we're starting to fund their benefit immediately. We're going to pay a % of payroll to help fund that, and then hopefully earn interest on that money as we go. What we're doing is comparing those assets and liabilities at a set point in time. So again, it's that 7-1. If we looked at a different date, if we looked at it today, the results would be different. If we looked at it 30 minutes from now, it would be different because our assets are invested in the market and those would change as well. So we look at it at 7-1 each year just to kind of have a standard date that we can compare to going back, like a point in time measurement. So that's your 30,000-foot view of what the valuation is. And if we can go to slide 2.
So can I interrupt just for a second? So I'll have it on the screen here, but in your packet behind tab 3, there's also the presentation itself is set up so you can fill it out if you want to.
And just to point out too, the presentation, and this is more for the benefit of the new folks, the presentation summarizes the results that are in that report. So
And this is the report.
So it's under tab 3?
It's behind tab 3, yep, and that's this.
I'm going to turn sideways here.
It's that one.
Thank you.
Looks like it's that. All right, thanks, Brian.
Yeah, so the presentation will be more of a high level, touch on some of the main key points. The full report has 100 pages of gory detail that us actuaries like to see. Lots of numbers in there. We won't worry about all that. So on slide 2, this is the one, the basic retirement funding equation. This is a key formula that we use. If you're going to print out any page and hang it on your fridge, this is going to be the page to do, so you can memorize this one. So the C plus I equals B plus E. Essentially, the money coming in would be the money that goes out eventually. So the contributions is the C. Those contributions, the assets will earn investment income. We're invested in the market, so that's that I portion. And ultimately, we want that to equal what the benefits are that we're going to pay down the road that we were talking about. Plus the expenses, there's some administrative expenses, kind of a smaller piece compared to these other 3 big components. So the benefits are essentially fixed, right? So the teachers will have a benefit when they retire, and that's going to be what their benefit is. Contributions for this system are set in statute as well, so that's a fixed rate of pay. So it's really that I portion that we need to, that will change, that we need to make up the difference to make those 2 sides of that equation match. If that makes sense.
typically about 70% of what comes out of that right-hand side is I. So
Yeah, and that's the exact reason that we pre-fund. Instead of like a Social Security as a pay-as-you-go, when these teachers start, we start putting money in for them now so we can earn that investment income. As Todd said, about 70% of a benefit will be paid for by that investment income on average compared to about the other 30% contribution. So it's a very important part of this whole funding equation.
Brian,
Yes.
may I unfortunately try to throw a wrench in this whole process just for a moment? I have one important thing I'd like to share today. I've expressed to this board in the past that I have very deep concerns based on the research that I do about the assumptions that we have under that I going forward. You know, now we're operating at 7.75%. 7.5. So I could go into the reason that I have for my concern, but rather than do that, what I'd just like to say is, would you be willing, all of you today, to take a moment and kind of address what would be the impact if, for example, that I should drop to say something like 5 in the future? And the reason that I bring that up is, well, again, that would probably be a subject for a much deeper discussion, but is a very genuine concern that I have based on a lot of reading and a lot of research. So, for example, just very quickly, there's a French economist named Thomas Piketty that has written a couple of very deeply researched treatises about this subject called Capital in the 21st Century. And he presumes that in developed worlds going forward, GDP is going to drop. And capital assets do have a better return long term than GDP in countries, normally by a factor of about 2 to 1. Capital being ownership of companies and real estate. The problem is, as you get more and more developed and your infrastructure is better developed, those GDPs tend to drop, and that is my concern for the future. In 2009, 2010, the Board of Investments did a particularly good job of keeping pace with their total return compared to the markets overall. But that was primarily due to private investments that have unique characteristics. So, and I don't think those characteristics are going to persist moving forward. So again, rather than getting into a deep discussion about whether this is a correct assumption or not, I think it would be useful for the board at least to look at the possibility that that might occur in the future, and how do we prepare ourselves for that in the event that it turns out to be true.
And I'd like to step in on that same note. I did a little research and I looked at the last 5 years of the expenses for the TRS system. Going into either the Board of Investments got about $8 million of it, but in the last 5 years, TRS has spent $115 million to figure out where our money should be invested. And maybe we should start looking at that too. Just my comment.
So you're speaking of the investment expenses?
Right.
Yes.
Yes.
So I'll jump in just real quick. So in your evaluation on page 7, there is the sensitivity analysis. It takes it down to 6.5%. And then in addition to that, if you remember in 2019, we did the full-on risk analysis, and that report's on our website where we looked at all kinds of different scenarios, including as low as 5%. Okay. So those, we've done a lot of that work.
And just I like this equation's up. So anytime you reduce I, right, so this equation always has to be in balance, right? So in order to pay a benefit out of that right-hand side, you have to have something on the left-hand side for the source. So to the extent that I decreases, C, the contributions would have to increase to make up for that difference, essentially. And the lower that you go, in terms of the I, the higher the cost has to be. And we use, surveys of capital market assumptions, for our assumptions. We're not, making it up, I guess. I know that yes, I think returns in the future are going to be trending down, just, just based on history. So, back in, the 90s, you could buy a 10-year treasury that would earn you 8.5%, right? So now 10-year treasury is like 1.8% return. So that's a big driver of, you can't buy fixed income. It's just not, and to your point, retirement systems have tried to target other types of asset classes to kind of achieve higher returns, essentially. And that's because you can't go buy a bond. It'd be crazy. There's some other tactical issues with buying bonds. Interest rates are so low right now. If interest rates go up, your bond values will just crash. So, that's why you have the Board of Investments and what they do. So, and we are, after this is a little later in the presentation, but after this, we're doing an experience study that we're going to come back in May, where we review all the assumptions, and the investment return will be one of them, and we'll make a recommendation. But again, we don't target one particular rosy scenario or doomsday scenario when we do that. We kind of take a broad look, and we use surveys of capital market assumptions to do that.
So could I ask, what other teacher retirement systems do you do studies for? What other states?
Our firm does it for 50 retirements. We're all across the country. So the ones in particular, so as you can imagine, working on one of these plans, you have to be available, right? So you can't be spread too thin and working on 80 retirement systems. But I work on the Montana systems here, and then the Ohio school employee system, which is much bigger, $16 billion. But our firm does many teachers, Minnesota teachers, Georgia teachers, Nebraska.
Thank you.
Should I just make one comment? I do think the picture can look awful rosy if you look at the other end of it as well. We've come from pretty low liability concerns, and obviously when you have a year that's 27 in terms of investment income, things are not going to be at 27 forever. But I also think that there's some real positives in this report, and I think much of the risks that we've been talking about are addressed in here. So I think we just need to give these guys a chance to share some of the stuff that's going on and then get the heart.
Yeah, and I would just kind of back that up by saying, I've sat on this board since 2004 and we've had many conversations like this. We've discussed going from 8% to 7 3/4 to 7.5%, just to be more realistic. But when you look at our overall long-term investments, we're above the 7 3/4. Our Board of Investments does a really good job for the money that we pay them, a very good job. And these guys show us every year, so we are looking at what we're doing. We're being accountable for what we do in our system. So thank you.
I have no doubt about the quality of your actuarial work, and the assumptions that you made, I think, are quite good. This is just a cautionary tale going to the future, because the past doesn't equal the future in terms of investment returns. And I think the world is changing in some very fundamental ways in terms of the way that capital and income is going to be created. So that's just my concern. It should, again, this isn't critical of anybody, not the board's actions in the past, not the actuary's actions currently. I just want us to remain aware of that possibility so that we really look at it carefully as we move forward.
Shortly after I joined the board, we crashed. You know, we had a negative 20% investment in 1 year.
Right.
And it wasn't much better the next, negative 12. And we were told we would never be able to actualize our investments, our returns. We were, okay, you can pay this off in more than 100 years, and we've done a lot of things to bring it back into where we are. And again, it's investment income that gets us there. And so, looking at the fact that I was told it'll never happen, we're now within 24 years that we can pay off our debts. So, it is interesting to watch it all of these years. And for me being a 30-year-old teacher at the time who didn't care about retirement to somebody who's now got 27 years in the system and knows how important it really is and how valuable it is to teachers.
I would point out also that there is an NCTR annual conference going on Monday, Tuesday, Wednesday, Thursday. Several of the topics that we're bringing up or incorporated into that, especially the risk comparison in asset class versus fixed income, and all of that. So I would encourage you to participate in that if you want to hear more of what some of the experts are saying.
Yeah, and just to let you know, back when back in 2008, it took until 2013 for the legislature to act in terms of additional funding, and there were some benefit reductions or changes for new hires after that point. So that's how unfortunately, I mean, the people that control, it's the legislature. They control the funding, by the law. So, as a board, you could go ask for more money, but I don't know. You don't have the authority to get it, right? So,
Well,
so that's kind of, so that's part of the.
And as a point of reference, in 2013, prior to those changes, we did not amortize at any length of time with a 7 3/4% rate of return. And today, even if you drop it down to 6.5%, we would still amortize in 57 years, which Todd will tell you, the difference between 30 and 40 years on an amortization basis is not that much.
No, it's not.
So things are better, certainly. But the whole reason we do this every year is we know things are going to change and we need to continue to monitor them. Our experience study will likely yield some different recommendations.
Yeah, and that's the other issue too. So we've been doing experience studies along the way, because there's been times the amortization period I think was in the teens at one point, and then we do an experience study and it jacks it back up to 30, essentially. So the system has made excellent progress. I mean, just in terms of getting back to where it is today. So.
So Sean, how much money is the taxpayer putting into the TRS system?
When you say taxpayer, do you mean the general fund
Yeah.
contributions?
Yeah. That is the taxpayers, right?
I think it's, so it's about 43 million. There's the 25 million that the state general fund pays on July 1st each year. That was part of the reforms in 2013. And then there's the 2.38%, which was supposed to fund the GABA. And so between the two of them, that equals about $43 million.
Thank you.
Had a great discussion already. So on 3, just real quick, a couple of additional pieces on this formula. So the benefits really depend on the plan provisions, right? So what benefits are the teachers going to get, and then plan experience. So most times a benefit is paid for lifetime of a member, and so if somebody lives longer than expected, we'll continue to pay those out. So that fees or that benefit portion is again paid for life, and so that will change with experience of each individual member. The contribution piece, we kind of talked about a little bit. In short term, it depends on the actual assumptions and the actual methods that we use, because those are kind of our tools to help budget or help come up with our liabilities. And so when we do this experience study in the next year, some of these assumptions will probably change, and that will change the contributions or the amount that you would have to contribute short term, since those are in statute again, that will kind of mess with the IPs to make sure that left side matches. But long term, the benefits, the expenses, the investment income is what it is, right? You're going to earn what you're going to earn. Teachers are going to be paid what they're going to be paid in benefits. And so that contribution really is the long-term balancing item in this whole equation. So we'll go into results now. I'll do just a real high level, and then I'll let Joey take you through the more details of the rest of it. So on slide 5, for the asset returns, it's kind of been mentioned. But we had a pretty good return. We were 27.7% return on market value of assets, measured from 7/1/20 through 7/1/21. So a very good year. Our assumption 7.5%. We were about 20% higher than that. So again, if you look across most systems, a lot of systems did have extremely good years. This past year, if you're measuring on 7/1, a lot of them best return like we've seen in 30 years. So again, it's a very, very good return.
If I could ask a question, what was it on 7/1/20?
Return was 2.7%.
So how much of that 2.7 to the 27.73 was a COVID bump, do you think?
Returns, I don't know.
I mean, the
COVID bump.
percentage.
COVID bumping what?
Well, just the whole investment world in the last year. Anybody who has an IRA knows that our assets have been looking pretty good. So in the last year, compared to July 1, 20 and July 1 this year, what was that difference?
Well, I mean, unfortunately, we're actuaries, so we don't really do anything with the assets. We just look at them and tell you what the return was. I couldn't even begin to tell you what the cost is. So,
Well, but you said 2.7%.
that was the previous year. So, but that is a good point, because last year when we came here, we were telling you that you're going to have investment losses you'd have to recognize over the next 3 years. So, and now that's been offset by this incredible gain, which is...
I call it the COVID bump.
Yeah. Well, I mean, we had the big drop in what, last 2 Marches ago, where we thought the world was ending, and then an amazing recovery, V-shaped recovery, right immediately after. So, is it COVID? Is it government spending? I mean, it's government spending right now that's propping the market up, So, and there's going to be more of that apparently. So.
Yeah. Thank you.
So the market value we actually don't use directly in the valuation results. We use what we call an actuarial value of assets, or a smooth value. And the reason we use a smooth value is essentially to help reduce volatility in contributions, or in your case, in the amortization period. Because obviously the market value returns can be all over the place. It can be 27 one year and 2% the next, and so that would, yeah, exactly. So that volatility would really could be an issue, and so we use the smooth value. And on the actuarial value, we are about 10.7% return, again above our assumed rate of 7.5, about 3% above that. So that creates an actuarial gain. We had better returns than expected. As Todd mentioned, last year we had deferred losses. So on the smooth value, they're never going to be equal unless we hit our assumption 3 years in a row, 7.5, 7.5, 7.5. I'm guessing that's not going to happen. And so last year we had losses that were flowing through. Now we have about $500 million in deferred gains. And so what that means is that if we hit 7.5 exactly each of the next 3 years, our actual value of assets, the return on it would be above 7.5, because we have this 137 million of gain flowing through next year, followed by 156. And so it's kind of a nice cushion to have. It's nice to be on this side that we'll have gains flowing through. It kind of helps offset if we have some adverse experience, whether it's demographics or assets in the future. And if you move to slide 6, so the funded ratio, this is our assets divided by our liabilities, just a real simple metric, kind of a point-in-time measurement. And that increased from 68.8% to 71.4%. So again, a lot of it due to the good asset returns that we had, moving in the right direction here. And in this amortization period, it's essentially the unfunded liability. So if you take our liabilities minus our assets, that difference, we have statutory rate that comes in, and whatever portion we have to pay off that unfunded, how long will that take us to pay it off in the future? And so last year was estimated to be 29 years. Now we're down to 24 years to pay off that unfunded piece.
Just an additional comment on that, just to demonstrate the volatility, using market value. It's in the report, but on a market value basis, our amortization period would be 15 years, and we'd be 79% funded, so almost 80% funded. So that's that 500 million that we haven't recognized yet. That if all things being equal, that's the direction it's trending. So,
and actually, we have to say if all assumptions are met. So there you go. So again, just high level, I'll let Joey kind of run from here on this.
I'll briefly go over some of the data and the trends that went into the evaluation to produce the results. If you look at slide 7, this just shows you the trend over the last 13 years of active and retired membership. The active membership slightly decreased for 2021, but over the last 13 years, it's increased about 6% annually. The retiree membership increased 2.3% for 2021, and it's a 2.8% average over the 13-year period. The statistic we like to look at is active to retired membership. So 13 years ago, there was 1.6 active members per retiree, and now it's down to 1.2 active members per retiree.
And as we age, as teachers age, what do you see that bubble? Has anybody done any studies? I mean, that generational thing.
We've done a study.
but we're expecting a lot of new retirements, in the next 10 years.
Yeah.
And that was pretty much shown in the risk analysis that we did last year. So, but yeah, we are expecting a lot of retirements coming in the next 10 years or so. That's why you have the assets accumulated, right? So you got to use those assets to pay for that, essentially.
Right, but you'll potentially recommend changes to the demographic assumptions of the people in the plan on the retirement rates and all that, based on our actual data as part of that experience study, correct?
That's correct. So, but those types of The retirement patterns themselves probably aren't going to change that much. It's just that people are getting older and getting closer to retirement. And so that's what it's causing it. So typically those adjustments are minor.
Looking on to slide 8, this shows the average salary and average benefit for the membership. 57, well, slightly over 57,000 for full-time salary average, and retiree benefit is 24,465. And you can see the average increase since 2008 in pay is 1.6% annually, and the average benefit has increased 2.5% since 2008. Will mentioned that the total payroll for the plan, the valuation payroll, increased 4.7%, and our assumption is 3.25. Just an overall view.
And that's generally a good thing for a plan. The more payroll that we have, we're bringing in contributions as a percent of payroll, and so the higher the payroll is, the more contributions that we'll bring in. So that's a good trend.
And yet it appears that the percentage of current salaries that are handled by retirement benefits has remained pretty constant over those years.
Yeah, you can see the average retirement benefit's $24,000. And that's also, that's part of our, the valuation process is every time, we do these snapshot looks, we're anticipating that you're going to have new retirements come on. So that's part of our valuation process. So we do not anticipate new active members. So that's the only trick there.
Slide 9 just shows you the full-time payroll and total benefits over a 13-year period. Full-time payroll is $787.2 million, and benefits, total benefits, $415.5 million. And again, about a 4.7% increase in total payroll from last year. And slide 10 basically shows you what we've been talking about on historical returns over the last 13 years. You can see that in 2021, there's a $500 million gap. You see the red line there. So the actuarial value of assets is $500 million less than the market value. And that'll be recognized, as John mentioned, over the next 4 years.
So you can see how that smoothing process has worked. So since 2008, that the Great Recession, you can see how it's brought that red line down or kept it flat. And but since then, it's been back on an upward trend because we've been. I mean, it's been an amazing run since then in the market in general. So.
And in our report, I will mention that there's a 15-year history, and it shows the average over the 15 years of the market return 7.5% per year, which is the actuarial value is not there, it's 6.7. And slide 11 will show the comparison of the results compared to last year. The normal cost actually went down 8 basis points. From 9.75 to 9.67, and that members pay 8.15% of that, so that leaves the employer normal cost of 1.52%, and the statutory rate increased by 10 basis points. So you had more available to amortize the unfunded. You went from 9.61 last year to 9.78 this year, which results in your 23-year amortization. Your actuarial accrued liability did go up $153 million, but your actuarial value of assets also went up $272 million. So net unfunded, the actual unfunded liability decreased from max valuation.
Just something to point out here that if the plan had zero unfunded liability, it was 100% funded, it would only cost the employer 1.52% to fund that benefit for active members. So what this tells you is that the problem with the plan isn't the active members or even the design of the benefit, because, I mean, that's pretty modest cost if you think about it. It's the unfunded liability.
So, for the benefit of our new members, board members, can you speak to the normal cost, what that is? I mean, I don't know if everyone
Yeah, so the normal cost is the cost of providing the benefit to an active member. So it's the cost every year. So if we think back to the C plus I formula, we're trying to accumulate money while people are in there working during their career. So say they're going to work 30 years. What is that amount that you have to accumulate on an annual basis in order to actually have enough assets to pay when they hit retirement? And that's the normal cost, 9.67%. The members pay most of it, 8.15%. So the employer is only paying 1.2% of the active's retirement costs, essentially.
So in theory, the methodology that we use would say that this rate would stay the same. So from the time that the teacher is hired, if we paid 9.67% in total, and all assumptions were met, by the time that they retired, their benefit would be fully funded.
I'm on slide 12, and this shows the gain loss.
Well, just back up there 1 second. Underneath the rate, you'll see just the high level, the liabilities of the system. So it's 6.4 billion. I'm sorry, yeah, 6.4 billion. The assets on an actuarial basis is 4.6. So your unfunded is the 1.8. And again, you see your funded ratio of 71%. And the goal here is to get to 100% eventually. Yep. So, and that will be amortized in 24 years.
And this shows the detail on gain loss. You can see the yellow bar is obviously the biggest gain, the biggest over the last year, 135 million gain on actuarial value of assets. The breakdown of the other items for your demographic assumptions, which is what we're going to look at when we do the experience study, produced the combined total of those is about 19.9 million on demographic losses, which when we do the experience study, we'll go back and look at the last 5 years and actual versus expected retirements, withdrawals, and so forth, and try to tighten those gains and losses up.
And we do expect variations from year to year. We're never going to be spot on because, like, if you think of mortality, we think 0.01% of a person is going to die. And it's really, they do or they don't. And so there's going to be some gains and losses every year. So we're really looking at the long term that we're hoping that these will kind of even each other out.
Yeah, and in general, though, it's a very small number. You compare that to the plan's total accrued liability, it's pretty insignificant. So.
And almost every year, the investment income kind of swamps everything demographic too.
Yeah.
And that's pretty much it. We're just upcoming projects that we're going to be working on, obviously, with the experience study in the spring.
The experience study, we kind of talked about it a little bit, but over the last 5 years, we will take all the data for the system and analyze it and look how many people we expected to retire versus how many actually retired, and at what ages. Terminations do the same thing, people that left the system. Did we have more people die or fewer people die than expected, and look at the mortality and how we're going to project that in the future. So we'll take a look at all that, as well as the methods on how we, the smoothing method for the assets, just kind of look an overall view of everything over the past 5 years and just make tweaks or recommendations to the board. It's ultimately the board's decision to set the assumptions. As actuaries, we will come in and make recommendations, but the board will set them. You can take all of our recommendations, or you can say, nope, we're doing our own thing too.
Then we don't have to pay you, is that it?
I don't know if I'll go that far, but but it probably is the most important thing that the board does as far as the liability side of evaluation. Assets are obviously extremely important, and that's why you pay your investment consultants as much as you do. But as far as the liability side, it's probably the biggest decision the board makes every 5 years.
And the two biggest assumptions, obviously, are the mortality assumption and the assumed rate of return. So we'll have to see what we come back with. But in general, investment, assumed rates of return, the average now with all across retirement systems is, it's just over 7%. So, and then as far as mortality is concerned, There's a new public plan mortality table that was issued, what, 5 years ago? Yeah, a few years ago, and so we'll obviously be recommending the update to that table as well, so.
Sean, excuse me.
I'm sorry.
Sean, just from your experience, have you noticed a bump in teacher retirement since the COVID distance learning? I know some of the staff in my area they have chosen to retire. What is your experience?
So we looked at that last spring, thinking that we should have seen a bump, as far as like July 1, 2020, and then we looked at it again this year. And actually, July 1, 2020 is down slightly from the previous like 4-year average. 2021 is slightly above that, but not. There hasn't been this tremendous increase in retirements, and it sort of felt like there was going to be, but it hasn't. It just hasn't come to pass. It was up slightly this last year, but not. It wasn't a huge percentage of increase. But I mean, I think we all know that the baby boomer generation is, they're pretty much all eligible for retirement. And I do think though, our active member, average active member, I mean, our age is coming down slightly.
Yeah.
The system is starting to get a little bit down because every year we have about 600 to 700 retirements in TRS and new retirements. So that's about the numbers between 6 and 700.
And I'd like to point out too that you don't have a formula that would, it's not capped, for instance. So like Georgia teachers in our state, the formula is capped at 30 years of service. So everybody in Georgia as a teacher retires the day they hit 30 years, and nobody stays. So you have your benefit, if someone continues to work, they continue to earn more benefit accrual. So, and then, I will say that 2008 psychologically did a number on people in terms of retiring. I think people, are kind of afraid to retire a little bit. So, because we did expect the baby boom generation to retire, actually to take place about 10 years ago, and it's been deferred, and a lot of it is because 2008 wiped out a lot of people's savings, and unfortunately, when your bank account is down to nothing, it's scary for people to be without a job. So
I think healthcare costs has a lot to do with that too.
Yeah, getting individual health insurance policies. Yeah. So with that, that's our presentation. Again, that's a great result. And we do have the experience study coming up, and we'll be back here in May. And thank you for your time.
I always love it when I look at the report and go, oh, this is good news.
Makes our job a lot easier with 27% returns. So.
Exactly, that looks really good. So thank you guys. This is a time for public comment. So if anyone else has any questions, concerns, comments? Not concerns, I don't want to hear it. Well, thank you guys. Thanks for your trip up here and always your great work. Thanks. Okay. So we need a motion to adopt our actuarial valuation results. What we just heard, what we've read, hopefully you have a chance to kind of look through. I mean, I'm sure you didn't read, every word, but that's our actuarial valuation for the year. And we just need a motion to adopt that.
I move to adopt the actuarial valuation.
Okay, it's been moved and seconded. Is there any further questions, comments? Seeing none. All those in favor indicate by saying aye.
Aye.
Any opposed?
Me.
Chair votes aye. Motion passes. All right.
Can we get Dan?
Oh, Dan, I didn't hear you. Aye, okay, thank you. Did you get that, darling? All right, so we'll move on to our executive director's report. Again, this will be after tab 4. And Sean will take this.
Yes, so thank you, Madam Chair, members of the board. Just a quick operations update. TRS staff fully transitioned to on-site work by September 7th, which was directed by the governor's office. Even prior to that, we were about 75% on-site work anyway, so we are fully there. We have had a few staff members here and there that have had to work remotely just due to either actually testing positive or being identified as close contact, but those typically are resolved within about a week, so they're back in the office, and we are still set up where they have their VPN access, and those, if their job allows for it, they are able to continue to work some or all of them during that quarantine period. If not, then they have the COVID sick leave available to them up and through the end of September, so that's finally, I believe, the 80 hours of COVID sick leave over the 2 years is finally expired fully at this point. But for all in all, we are essentially operating as normal. Our benefit officers are meeting with up to 2 members per day, 5 days a week, as well as going out, as Sarah Piper mentioned earlier, they are out in the field doing the Ready Set Retire presentations this fall. So things are essentially back to normal in that regard. As far as a staff update goes, we did hire Allison Russell. She was actually on staff, I believe, when we had the August meeting, but we don't go through this sort of normal things in August meeting with strategic planning. But Allison joined the retired payroll team, and she's doing a great job for us. One of the strategic planning items that the board has had for the last couple of years has been to bring an internal auditor on staff, and that auditor would audit employer data, so our positions that are supposed to be reported to TRS being reported to TRS, is the right compensation being reported to TRS. So that would be about 75% of their job would be to do that external auditing, and then about 25% of their job would be to audit our internal controls. So they would make sure that our accounting staff or other various staff is following the internal controls we have in place. We've had that position advertised now for about a month and a half. We did an initial review of applicants and did interviews. We only had 3 applicants after about 3 weeks of being advertised. We did interviews with those 3 individuals. None of the 3 of them had the level of audit experience that we are hoping to bring in, so we've actually left that position open for another 3 weeks, and we've only had 1 other candidate who just, you can tell on paper, doesn't have the qualifications we're looking for. So we're actually going to take it off, we're going to unpost the position for a month, and then we're going to put it back, we're going to re-advertise it a month from now. And I've spoke to DFA, HR, part of administration, human resources, which they have, all kinds of positions they're trying to hire for, and this is not uncommon. Right now, the labor market is really tight. There are a lot of positions that are going unfilled because they can't find anyone, or the applicants are getting qualified for the position. So it's just kind of a matter of where we're at in the world as far as COVID and people returning to work. I think that based on everything that Nolan and I can see, and the advice of our HR representative, the position is advertised in an appropriate range of pay. I mean, we advertised it with a range of pay of $58,000 to $62,000. But we're just not getting right now very hands on. So we'll continue to try to fill that position. It's a board priority, and we'll get there eventually. It's unfortunate. I was hoping to be able to tell you we've done our interviews, we picked a person, and this is but we're not quite there.
Sean, if I could ask, when you talk about internal controls and the person who's looking at your internal controls, is that something that was pointed out by legislative audit, or what were the findings on the last 2 TRS audits?
So, Madam Chair, Member Brown, the last 2 legislative audits have been, they've been unqualified opinions, so no audit findings. There have been a couple of recommendations. Certainly, legislative audit does audit all of our processes, including our internal controls. Really, the driver behind this is primarily to do that census data testing of our employer reporting. We have 1 staff member here at TRS in the active team that pretty much their entire job is nothing but dealing with reported an error member, so people that were reported to PERS that should have been reported to TRS, or vice versa. And of course, we catch those oftentimes as we're doing service audits for the purposes of an estimate of benefits. This person would be proactive, looking at an employer's entire payroll, making sure that they're reported to the right systems. And really, what it does is it goes back to the GASB 68 requirements and all of those employer reports that we issue. It will help make those more accurate. And it was communicated to me a couple of years ago by Ms. Jorgensen with legislative audit that if we had our own internal and external auditor, similar to what Impera has, that our audit costs for GASB 68 would go down. She wouldn't give me a number on that, but in the 2 years have passed at this point, so who knows if that's the case. But that's really why we did it, or why we're trying to do it, is for the
So
external.
Impera is doing the same thing
They are.
as we now are.
We are, and we'll coordinate that work so that we're not looking at the same
Right.
employer, because really, if you're auditing, if one of us is auditing that employer, both of us get the benefit.
Yeah.
Yes.
Thank you.
This is another opportunity for public comment. Questions for Sean? Seeing none, we do have a break scheduled, but how about, as our strategic planning seems to be quite a,
That's a big chunk.
A big chunk.
And actually, Jim won't be here until 10 o'clock, so we could jump maybe to agenda item number 6.
okay, everybody okay with that?
Yep.
All right, so we're going to jump to the administrative business investment report. Since we don't have Jeff here, we'll have Sean go through what he knows.
Yes, thank you, Madam Chair, and members of the board. So behind tab 6, there's, starting on page 34, you'll see this is the monthly performance report we get from the Montana Board of Investments. And since we have 2 new members, we'll take a minute maybe to go through this. So at the top of page, the whole punch is through. On the top of page 34,
Yeah.
you can see that our total market value of assets is now $5.2 billion. And just as a point of reference, when I took this job just about exactly 8 years ago now, we were under $3 billion in total assets. So we've really gained a lot of ground in total assets. Not that I have anything to do with it, I'm just telling you that the market has been very, very good to us. I don't do anything with the investments. So that's our total assets. And then they're broken up into the various asset classes, our actual value of holdings at that point in time, which was August 31st. Then if you come down, the longest measurable plan return, that's our inception to date return since Board of Investments has been able to track essentially our return going back to July 1 of 94 is 8.24%. So you'll hear us talk about that. Here and there, usually when I send this out on a monthly basis, I'll let you know our inception to date. If we had a bad month, it'll creep down, or if we have a good month, it'll continue to creep up. But our actuarial rate of return, like the actuaries just told us, is 7.5%. So since 94, we beat that assumption. And then you have essentially the returns by asset class for 1 month, 3 months, fiscal year to date, 1 year, 3 year, 5 year, 10 year, and 20 year. And the inception on those, it varies by asset class. So unfortunately, I was not at the last Board of Investment meetings. I usually don't attend those. So Jeff Greenfield would have been our board representative on BOI. Since he's no longer with us, that's what I know.
That's all we know.
Yeah. Things are good. I mean, the month of August actually was very good at 2.28%. That's a
Do we
good
have
start.
any, how do they put the TRS person onto the,
So the governor will appoint one of the 6 current members to the Board of Investments Board.
and I know in the past people have expressed interest or things like that. Is that how it goes? I mean, I know that both Dan and Daniel have expressed interest.
Yes. And so, and
It's just another couple meetings a year.
I'm not sure. Oh, as far as how much workload, it's actually quite a bit more than
Yeah.
TRS. They meet more often.
It's like 8.
Yeah.
I think.
8
More
plus
often.
ours,
Yes.
5.
Yeah.
And they don't coordinate.
No, of course not. Are you still at all interested?
Yes.
That would be very beneficial. And Dan, are you still? You get a public meeting saying that would be good.
Yes.
Okay, I didn't hear you, I'm sorry.
Sorry, I just said, I would consider it for sure.
Okay.
I would too.
Okay.
All right.
All right, with that, Madam Chair, unless there's any questions, that's my update on investment activities.
All right, then we are on to Nolan, our financial statements and budget reports.
Thank you, Madam Chair, members of the board. For our new members, my name is Nolan Brills, and I'm the accounting fiscal manager for the teacher retirement system. Every board meeting, except for the August meeting, I usually go through some financial reports as the point in time and the budget, the current budget. We do pass, or the board passes a budget justification in the May board each year. So, starting on page 38, these are typically what they'll look like. All of these financials and budget are as of August 31st, 2021. I do have the September ones prepared, but they always get prepared just right after you get all of the previous ones, since we have our board meetings at the beginning of the month. So as of August 31st, 2021, you can see the balance sheet. You know, if you have any questions going through this, feel free to ask. You know, the big one that jumps out at you is our, you know, the cap or the consolidated asset pension pool is up about 800 million roughly from this point last year. So we always have a comparison of at the same point in time in the previous year. And that's what you'll see the largest you know, outlier for is our investment income and investment appreciation in our financial reports. We did sell our building last fiscal year, so we no longer have any land and buildings there, so I just thought I would point that out. Our intangible assets there on our assets are the M-Trust project that we've been working on for the last 6 or 7 years, and some of that has been obviously added to the books and capitalized over the years, so that continues to go down as it gets capitalized. Is there any questions on anything on the balance sheet? Obviously, the total assets difference between this year and last year is definitely mostly due to the investment income and appreciation.
Who did we sell the building to?
The board investments.
They're going to use it as their space, or?
I mean, I believe they're renting it out to, we had a lease agreement with DPHHS that I believe just carried forward one of the investments.
It's in one of their investment properties held by not one of the retirement fund trusts, but a different trust.
And what do we pay for rent in this building, Sean?
No one can tell you that.
So, yeah, I believe it's right around $12,000 a month. It was $9,000. We had a little bit of a rent holiday when we first moved in, and then it went up this year to around $12,000 a month, and it will go up, I believe, 3% each year.
So basically, we sold a building over by the Capitol. We're paying $144,000 a year here. So in 6 years, we could have bought our own building back.
Indeed, for your edification, this board spent 2 very detailed years looking at an in-depth analysis of what it might take to get that building reconfigured configured so that it was acceptable for the staff, both in terms of size and the quality of the air and many of the problems that we had with that building. In the end, and unfortunately, you missed all that analysis. We are absolutely convinced that the decision that was made was very appropriate for the future of this organization. So,
I understand it had some asbestos mitigation and that kind of stuff too.
In our staff.
in fact, I would probably tell you that if you went around and surveyed the board and any of the other employees in here to an individual person, they would all tell you that they were all deeply relieved that we made that choice.
Thank you. I'm just looking at numbers.
I know, and that's good. It's good. Fresh eyes are always valuable.
And we still had to pay rent, even though we owned the building.
Yeah.
So it was one of those things where it still cost us even to own our own building, so.
It was about half.
Well, it still costs us to own our own house, doesn't it?
Yeah.
Yes, yes.
Thank you.
And the sale of the building, I believe it was right around 850,000 that we, was a gain on the investment over the years.
So you likely remember, the long-range building bill came through, we got about 500,000 or 550,000 to remodel the building. And we went through with that, and we ended up selling the building for 1.4 million to the Board of Investments. And they were able to address most of those issues. However, the building itself wasn't big enough for the staff. And so in the meantime, we had spent a year, in a different location, and it didn't make sense, like Member Chamberlain just talked about. We did pine over this for many, many meetings. And
We had staff in
in-depth analysis.
staff in a basement, no windows, and, just was not a productive place to work.
You and I talked about the money issue
You
a
did.
couple years ago, I think. Go ahead.
Okay. So moving on to page 39, if there's no more questions on the balance sheet, this is the fund balance statement. Again, it just compares as of August 31st, 2021 to August 31st, 2020. Obviously, it was a very good year for investments last year, even better than what we've seen so far this year. So our total revenue, is down compared to this point last year. And our expenses have stayed fairly flat. You will see, there's an increase in our withdrawals from the system. I mentioned it to the board at our previous board meeting, but we've taken on a project where we are sending out letters to all of our dormant members who hadn't had any contributions come into the system within the last 7 years. That had been neglected for a while, so there's a lot of letters going out, and a lot of those people are choosing to withdraw because they're non-vested members of the system. So our withdrawals have gone up pretty significantly in the last year, but that should level out here in January because we will have gotten through that project basically by the end of this calendar year. So.
But they're a short-term withdrawal where if they came back into the system, they'd be long-term.
Exactly, yeah. Yeah, I mean, it definitely benefits us, to get that liability off the books, I believe. And so there's not, unless there's any questions on the fund balance statement, like I said, the total revenue is down, expenses are fairly flat. Obviously, the biggest expense that we will always see is our benefits payments, out to our members, our retired membership. But, in the end, we still are in the black. We have about a $16 million revenue over expenses at this point, or as of August 31st, which is, down pretty significantly from last year, but that, as we've talked about, was a pretty big outlier for the investments. So, any other questions on the fund balance? The last page is just kind of investment revenue by source. We really only get appreciation, depreciation, or gains, which I believe would just be the sales of those long-term assets. So, And then below that is our kind of breakdown of our administrative expenses. And one of the ones that I would point out, and is probably the biggest difference between this year and last year, because our administrative expenses are lower than last year, and that's just mostly because the phase 2 of our M-Trust project has actually been fully amortized. And so we're really only amortizing phase 3 of that M-Trust project. And so our amortization expense is going to be significantly lower this fiscal year. Page 41, if there's no questions on the financials, this is our budget as of August 31st, 2021. Just kind of a breakdown of how, for the new members, how the first column there is what was actually expensed in the previous fiscal years for the full fiscal year for fiscal year 2021, and then the next column is the budget that was approved by the board in May, broken down by these various categories, and then our expenditure to date. And then we do have a projection of, a percentage, I guess I kind of skipped that column, but the projection is obviously based on some assumptions and how things will be spent, and it's very difficult only 2 months into the fiscal year to kind of project those expenses forward. But at this point, we're expecting a surplus of around $219,000, keeping in mind our audit fees are making up about 84,000 of that, and those are a biannual. It's like one of our only budgeted categories that we are given a 2-year cycle on. So really we have 169,000 that we're budgeted over the next 2 fiscal years. So we kind of take half of that we'll roughly spend this year. So really, I mean, the 111,000 is probably a better projection of what our surplus is, because the rest of that is made up in a category that we really have no control over. That we'll likely carry that half of that over to the next year. So,
How many people, Sean, are in the category of personal services? How many people on salary?
21 FTE.
And the same amount taking health insurance?
Yes.
And same amount with benefits?
Yes.
Name some of the benefits.
So retirement benefits.
Leave?
Yeah.
Vacation, accrued vacation, sick leave, those kinds of things. What else would be in there? Insurance.
Yeah, the health insurance is a separate category.
Yeah.
So the salaries are, and we did project our new position that we had spoken about earlier, the auditor position, that is included in this budget. That's why we're probably seeing some vacancy savings there, because we haven't filled that position. We anticipated filling it, I think, around August, September timeframe, but obviously because of the things we've already spoken about, we'll see some vacancy savings for that particular position. And then as, we haven't really experienced any turnover, so far this year, but as if there is any turnover this year, we'll probably realize some more vacancy savings.
So Sean, when you advertise for this new position that you pulled off and you're going to put back on, do you not only include the salary, but also the benefit package, what its value is? Because I think that is a real value.
It definitely is. The posting that we put out there, for external candidates speaks to all the benefits. I don't think it gives a dollar value though on the actual DFA posting. Some they used to years, like 5+ years ago, you would see postings and they would say the value of the benefit package.
Maybe we should go back to that, because that is a huge benefit. And it's a non-taxable benefit. So it's almost double.
Yeah. Yeah, like for retirement purposes,
Yes.
tax deferred at least, yes.
Yeah. Thank you.
So again, very tough to project, our budget going forward at only 2 months into the fiscal year, but these things get a little more accurate as, as the year goes on, the fiscal year at least. So is there any questions on the budget justification, or the budget status report?
We said we can't predict, but we have actuaries in the room.
They're good at assumptions.
The next 2 pages are more just sort of informational. This just is something we've always presented to the board. It's our largest expenditure category, contracted services. So we kind of break that down of what each category, each expenditure is. And so if you have any questions, feel free. We always present to the board our delinquent agency report as of a certain point in time. Those are schools, typically schools that have not gotten their reports in on time, or that we do a very good job of contacting those employers, and we have never charged interest or anything like that for our delinquent employers, and I don't believe it's an issue now. Obviously, you can see there's no delinquent employers as of September 10th when this was done. So. That's all I have, Madam Chair.
Thank you, Nolan.
Thank you.
And our last thing in administrative business is, not the last thing, sorry, the Napa report from Denise. I skipped you. Okay.
Madam Chair, members of the board. So, mostly for the 2 board members, NAPA is the National Association of Public Pension Attorneys. Received some training materials or some background information from Sean. It sort of indicates that a number of internal staff have substantial ongoing educational requirements. NAPA is what fulfills those educational requirements for me. They are a spectacular organization, and their conferences are typically really, really valuable in keeping pension attorneys apprised of what's going on with the IRS, other public pension plans, etc. So in 2020, they did not have their educational conference, of course, because of COVID. This year, their conference was virtual, was online, which made it a little less valuable, to be honest with you. Public pension attorney, the conferences usually have multiple tracks. A lot of pension systems, of course, manage their own investments. We do not. I typically choose the tracks that are not investment specific because I don't write investment contracts or those sorts of things. And this year, the 12 sessions that they had were fairly evenly split between investment versus non-investment sections. The couple of sections, though, and I am always amazed at how things sort of fall together. We always hear about the upcoming issues or the relevant, most important issues for the IRS at a particular point in time. And one of them was a reiteration that RMDs, required minimum distributions, are a focus of the IRS for audits. We're certainly not planning on being audited by the IRS, but Nolan was mentioning the term non-vested, the efforts that we've made to the withdrawals to get people who have been out of the system for a period of time, have money on account with us. Of course, they don't hit their required minimum distribution requirement now until they're 72 years old, unless they hit it at 70 and a half. But anyway, we have an obligation, the IRS, in their audits of public plans, and there aren't a lot of them going on as examples, but it is in their handbook as a primary issue to look at, is whether or not systems are making their required minimum distributions when they're required to. So we have implemented a sort of whole system process to get people, when they're out of the system, to take their money if they're not intending to come back to work for TRS, so we don't bump up against their R&D requirements years down the road and have lost track of them. That's the other thing. A major issue for the IRS and audits is to make sure that you are looking for your lost people and getting them their non-forfeitable benefits or contributions to the retirement system. So I always like when, you know, things all come together. One of the other issues that was particularly relevant to us was the importance, the focus on system governance, pension plan governance at this point, and it was, you know, it's kind of unfortunate when you're not there to talk amongst your peers, but there, one of the primary comments was how important it is for a pension plan to have a substantial funding and benefits policy. And not something Sean's mentioned this time around, but we really ran ahead of the curve on having a substantial funding and benefits policy. It's linked in those preparatory materials you both received as well. But from the standards that they laid out, and we've had you know, peer review actuaries comment the last 2 times we've had peer review audits done, how well done our funding and benefits policy is, and based on the conversation at Napa, I think that we are still well placed based on our funding and benefits policy. So again, I'm sorry I didn't make as much mental note of the investment segments as perhaps Dan would have liked me to do. It's not that they're not of interest to me, it's just that it's not work that I do, but so it was, I'm sorry, a very short conference summary this year. Next year will be more substantial because I expect we'll be back live and in person for a full-blown conference next year.
Well, I think it's great that you have looked for the people who are not coming back to the system to get them off the books. I think that's really the right thing to do.
Right. And there's a whole line of correspondence that goes with that process, and in the past it has been a board concern as well that we not push people out of the system if there's an anticipation that they will come back and become benefit recipients of the system. And so our communications all, you know, handle lay out the full range of options and opportunities and really push people to take their money when it's time.
Okay, then my question is, if they choose to come back, once they have been severed, could they buy back that service and continue?
I want to say it's 19-20-427 in our statutes, the redeposit provisions. So yes, somebody who leaves, withdraws, can rebuy their forfeited creditable service by redepositing their contributions with interest.
And I assume that goes with the letter.
They do,
Yes,
yeah,
it's-
they're notified of that.
right.
And then the only thing, in addition to that, is that if they withdrew as a tier 1 member and then they come back, they would come back as a tier 2 member, which is the cheaper benefit structure for us, yes. And, you know, just to add on just a little bit to what Denise is talking about, so part of the M-Trust, you all will hear the word M-Trust, and that's our pension administration system. And some of those upgrades that have been done to that system in the last 12 months is what has allowed us to be able to do this automated correspondence for people that have not been reported for 7+ years. And because we've had the dormant status in our statute for a long time, but we have not done anything with that dormant status since there was one round in about 2008 or 2009 where they took anybody that had less than $200 on account that had no contributions for 7+ years, and they made them dormant. But we gathered them plus all these new ones that have hit the 7 years, ran through PBI for member locator services to try to find good addresses for them. And we did that required correspondence, and you can see just based on the numbers, our withdrawals are more than double what they were last year. So
Good.
we are making the efforts, and it does focus on the back end, so those are less RMDs that we have to deal with that, you know, ultimately require a certified letter, which those are very expensive.
Thank you.
Thank you.
Thanks, glad you enjoyed it.
Any other questions? No, it's always a good conference, it truly is, and I always appreciate.
Well, thank you for bringing back the relevance.
Denise, let me ask you one quick one. In regard to the IRS and what they're looking for in auditing MTRS and the RMD situation. I know it's each individual's responsibility to request those RMDs. If they don't take them on time, they're subject to a 50% penalty. But if we had, I mean, would it require a legislative decision to allow us, if we had an accurate address of record, to just send those out automatically? We probably couldn't do that because we'd have to determine what asset to sell, and I mean, it would be so complex. But what liability are they looking at us for, just in terms of making contact?
Well, the RMD requirements in general are a qualification standard
Right.
under the IRS. So not making your RMDs when they're required, it's an obligation on the retirement system to make it happen. And looking for lost people is a part of that process. We actually have in statute a provision that for people who are hitting up to their RMD, who are vested with us, entitled to a retirement benefit, we have a provision in statute that says if you don't apply for it by your RMD date, we're going to involuntarily retire you on a 10-year period certain and life benefit. So we actually do have
Okay, that legal right.
statutory.
And so the process to try and get a hold of them, and then the capacity to follow through with this 10-year period certain, is what our liability is to the IRS.
Yeah, I mean, typically, if you're making good faith efforts to comply with the requirements, I mean, you know, we have had people who have essentially said, I don't want my retirement benefit, or I don't want my retirement benefit yet, and it's, you know, we do have the provision in statute that we can force it.
They don't have that option.
Right.
Government wants their taxes.
That's exactly it.
Thank you.
Thank you.
All right, now the final administrative business is to look at our tentative meeting dates, which the next meeting date we have set at December 2nd, which was a Thursday, and I can't remember why, but there was a reason we did that.
Because we've done it before and everybody thought it was cool.
Great idea. But usually we do Friday, but there was a
We had
reason.
somebody that couldn't be here.
Yeah. So December 2nd is really the one we focus on, so that if everybody can attend, and we'll change if we can. And then we just put out there February 18th, May 6th, August 5th, so that you're kind of aware and put those on your calendars.
Thank you.
Okay. So does December 2nd work for everyone? All right.
So it happens to be December 2nd this year and December 2nd next year.
Next year.
Right, yes.
Good.
Dan, does that work for you?
Looks good for me, thanks.
All right, thank you. All right, so, let's see here. Let's take our break. We'll take a break until 10:10. Try to get back on time, and we are ahead of schedule a little bit, but I don't want Jim to have to wait too long either. So 10:10 we'll come back to.
Okay.
We'll call the meeting back to order. And we have Jim, Dan, are you here? Thank you. We have Jim Cairns with us to do some finalization of our 2021 strategic planning summary and commitment worksheet. I'm going to have him go through his stuff, and then we'll just take a minute to do what you said a moment ago. But just so you know, we, in August every year, we look at our strategic plan, and every other year we create one. This also works for Sean. This becomes his kind of evaluation tool, but it helps us have a direction as a board as to where we're going to go in the future and what kinds of things are our priorities. So Jim Cairns is our helper with this, and he's excellent, so I'm going to let him take over.
Great, thank you, Carrie. So, yeah, like Carrie said, we did strategic planning in August, and the board developed kind of a draft strategic plan. Sean and his leadership team and I then met and kind of refined that, pulled it together a little bit more, and filled in some of the gaps from the planning sessions. So today is really the board's kind of final pass at this for your final approval. There's plenty of room to make any additional comments or suggestions And then the strategic plan itself, the summary that we're looking at today, will actually be published on the TRS website. And hopefully it'll be a great tool for communicating with our partners, or you as board members will be working, with Sean and Darla on external messaging. This may be a tool to support you in that. And if nothing else, to communicate to our stakeholders what it is we're doing. And the strategic plan was very well informed by input from members. The TRS, under Darla's leadership, had conducted a member survey, and we considered those results very heavily. The board thought about those in the planning process. We also did surveys with our affiliate groups, and staff had strong input on the plan as well. So it's been a really collaborative process, and it's been a successful process for the TRS. It's been going for a while, and I'll briefly run you through the background of the planning. So what we're going to focus on today is all of this kind of culminates in a commitment worksheet, and that's going to be the focus of our review today, just to make sure the board's all in alignment with what our priorities are for the next 2-year period. And then, like Carrie said, we'll touch base with it, next year, and then refresh the plan at the end of the 2-year period. So just briefly looking at the summary, basically it'll start with the table of contents. I won't spend any time on that. This is just the introduction to the strategic planning session. And I think most of you have these in your packets, so I'm not going to spend a lot of time reading to you what's on the screen. But this basically goes through our background. So the strategic planning process started in 2009, and it's been ongoing since, and the board and staff have had quite a bit of success in setting goals and achieving them. So that kind of walks you through the background and everything. I don't think we'll have many comments on that.
Excuse me, Tim.
Yep.
I'm sorry to interrupt. We're not broadcasting what you have on the screen, so Daniel Trost is not able to see that.
Oh, okay.
Are you sure? I just looked on your screen.
I believe that's coming off of your feed, because the screen isn't advancing. Sorry about the interruption.
Oh, no, thank you.
Technology, isn't it? Fun.
Sorry, Dan, we'll get you figured out. Oh, okay, he does have his own copy, he
So
said.
how now is it moving?
Yes.
All right.
All right, thanks, John. Thanks, John. Well, all right, so basically, the current mission, vision, and guiding principles, the last strategic planning session, there was some fine tuning to some of the goals, but basically the mission and vision and guiding principles, the board, reviewed those and determined they're still accurate and appropriate and reflect what we do and what we want to do and what we want to be. So I just wanted to briefly touch on that. Sarah and Dee. And then the operational and environmental assessment. And I'm sure both of you have been through like a typical SWOT assessment, strengths, weaknesses, opportunities, threats. We took a slightly different approach and just looked at internal strengths, internal challenges, external opportunities, external challenges, and the thought there was just to keep kind of focus on moving forward and the positives. So pretty good summary of kind of what's going on in our landscape, both internally and externally. So I don't know if anybody had any thoughts or comments in any of that part of the plan as far as board members. We reviewed that stuff fairly thoroughly, so I think it should be in good shape. I just want to give everyone a chance to comment. We have our internal strengths.
And just so you know, this is probably a 4.5-hour process. We spent an entire day, anyway, probably more than that, going through all of these things, plus every single, as a board,
to the prep.
the prep that the staff does, the staff gets back together, and then also we look at this every single board meeting to know where we're at, just so.
And I really like that you're doing a lot of cross-training, because sometimes some places don't do that and a person is out and, it goes to heck pretty fast. So cross-training is a really good idea.
Yeah. Yeah. And I mean, genuinely, the TRS has enjoyed having a very engaged and active board and very responsive staff, so things have been going really well, and like Carrie said, this process carries through into the performance management process. Obviously, some of the strategic objectives in this plan are going to land on Sean's appraisal, and of course, some of those things are going to go out to staff as well. So that's kind of just a rundown of the operational environmental assessment. We did try to kind of combine or cluster things, I guess, into groups. So the internal strengths, we talked about staff, the culture, communication, training, our infrastructure, member benefits and plans, and then our partnerships are all some significant internal strengths that the TRS can leverage. And then we talked about some of the internal challenges. You know, anytime we have such a talented staff, anytime there's retirement or turnover, that's always a possible threat to disruption. You know, we've got some difficulties reaching all our constituents, getting people to understand the value of the benefits in the program that the system provides.
And you know, Sean, isn't that the conversation that we had about the opportunities that you have taken to reach out to some school boards for that discussion with their staff?
Yes, you're speaking to the recent developments.
Right.
Yes, yeah, absolutely. I mean, I guess it is something that can be both a strength and a weakness. I mean, we do, like, I try to attend this state superintendent meetings,
right,
the SAM meetings, and like you're referencing reaching out to Bozeman Public School staff, talking about the proposal they have. Those are things that we do every time we can, and it's just, are we reaching everyone, I think is the internal challenges, but we certainly do everything we can.
And those external partnerships, and you'll see that's one of our biggest external opportunities in the TRS, and certainly some of the partnerships we've, you know, the system's already developed, like with MFPE and Sarah and everything. I mean, we've got some great partnerships, and those affiliate groups are very helpful as far as getting information both to the system and out from the system. Some other external opportunities, you know, training, just keeping our board and our staff up to speed. Like you mentioned, the training for school boards, possible virtual delivery. Yes?
One of the affiliate groups that we're engaged in a lot is SAM, and they're not in there.
Thanks, Scott. Okay. And then some of the external opportunities continue, just some of the things we're actually going to be working on, you know, our auditing and capacity, building on the communication program. That's a major strength of the organization and also a major opportunity to keep the information flowing. And then the final element of the operational and environmental assessment was the external challenges. These are some of the things on the horizon that could potentially adversely impact the system. You know, there's a lot of things I think outside the board's control, federal, you know, state legislation, those types of things. There's a lot of issues with the workforce, and you know, thinking about how the system can support schools in attracting and retaining qualified teachers. We've got a lot of retirements coming up, and obviously the pandemic's pushed up a lot of people's retirements, so we're experiencing a pretty significant workforce shortage right now.
Jim, sorry to interrupt you. Can you go back to page 22 on external opportunities? And I just want, we've touched on it, just sort of scratched the surface a couple of different times today, but I want to make sure that both Member Brown and Rich understand that we are a member of an organization called the National Council on Teacher Retirement, NCTR, and Scott is actually signed up to go to attend their annual conference next week. Typically, they offer each year an annual conference, which provides, you know, some great training and network opportunities, as well as during the summer they do a trustee workshop, which is just, it's geared specifically for board trustees. And I don't know if one of you want to speak to it. I know Carrie and Scott both have attended several of those. They're really a great organization, and I think the trustee workshop especially is helpful for board members. And I just want you to maybe have that sort of on the back burner, something you're thinking about potentially doing next summer. But one of you want to just
Sure. The trustee side of this was really addressed by NCTR about 10 years ago, where they started recognizing that an organization of executive directors and business-oriented people included members that weren't really getting a whole lot of training in terms of the kinds of things that they need to do within the organizations. And so they've really gone out of their way to try to bring people together, to network them, to bring them the most accurate information that's out there, as well as try to give them a stronger education, I guess, in terms of the kinds of things that happen at the board level and the needs for that. At one point in time, that training alternated. It's typically in July, alternating between Boston and Berkeley. The last couple of years, it's been in Berkeley. And they really do a good job of listening to what our needs are as trustees, especially new trustees, in terms of preparing for their services.
Isn't it going to be virtual this year, Scott?
It was virtual this year.
It was, okay.
Yeah,
So the one you're going to next week is not?
The one that I'm going to next week is also virtual. That's the annual meeting, which typically is in October.
Right.
It as well is very valuable, but it's geared on educating everybody as opposed to just the trustees. There's been times when, as an organization, as a board, we've taken close to an entire board to, assuming the agenda makes sense, assuming the needs of the board are being met, to some of those trainings, and actually to one of those trainings that we went to. And typically somebody goes almost every year to that individual training. Next year will be, I want to say, like the 17th through the 20th of July.
I've been to both. I've been to the NCTR conference, and then I've also been to the trustee ones, and both extremely valuable. The conference is much longer, harder for me to attend as a teacher in the middle of October. But the summer one is fabulous, and I really learned more about all aspects of the retirement board through it. And you are being trained. The training is incredible, but the networking, to be able to talk to other people and what their systems go through, and common goals, common problems, etc., is really, really
much of the board input that goes into the strategic plan comes from essentially broadening our horizons in some of those organizations, finding out more about that. NCTR in particular is really getting good of late in webinars, and their webinars are very informational and broad-based and cover a number of different things. And of course, with almost all webinars, they're available anytime. You don't have to participate actively.
My one request is that you would put someplace in this the acronym meetings, because we can go through all of these, but if you just had them there so I could look at them again, refresh my memory.
It's a great idea.
We get so used to it, you know, it's kind of like going into an IEP meeting at school. We use all these little acronyms that nobody else knows what they mean.
So would you prefer the acronyms be defined like the first time they occur? Would you like to just have a list of acronyms?
Just a list is
Okay.
good. Yeah, I can refer back, but I mean, I know AFL-CIO, but
Okay, I'll just put that as part of the report for all our audiences.
Then you don't have to reproduce it each time, just upgrade it.
Yep.
update it.
right.
Great, thank you. Very good.
Both NASRA and NERS as well.
I don't know why, but Nazar makes me think of racing cars.
Yeah.
It's close.
And then, you know, staff and Sean and everybody will be making board members aware of those training opportunities and coordinating all your arrangements, travel and everything. That's something you're interested in. I think we have something in the commitment worksheet about those specific training opportunities as well. Okay, so we went through the external challenges, workforce issues, operations, training, communication is always a challenge. the goals and objectives, the board took a look at the 2019, 2021 goals and determined they're appropriate. So basically our overarching goals, so just to kind of give you the hierarchy of a strategic plan, usually the mission of an organization is pretty static. I mean, that's going to have a 5, 10, 15-year shelf life. In government, it might have a 20-year or 30-year shelf life. Because a lot of our stuff's set in statute, you know, things that the mission doesn't change as much as a private organization. And then, you know, our vision is kind of where we want to be in the future, so that may evolve. Our values are fairly pretty static. And then the goals are basically the major steps we're going to take to achieve that mission. And they are going to evolve over time. You know, these goals have changed over the last couple strategic planning sessions, they've evolved. But at the last session, basically, the 3 goals that we have were considered to be still adequate or appropriate in moving our organization forward. So they evaluated those 3 goals. You can see there: maintaining a qualified plan, sustaining a high-performance culture and service excellence, and then our communication and outreach is going to be an ongoing effort. Some of the things we looked at from the last strategic planning session, and I'm on page 9, were some of the accomplishments from the last strategic planning.
It's 25.
25. Oh, I'm sorry, 25 in your packet.
We have our own counting system.
New math.
Yeah. So I'm looking at the 2019-2021 goals assessment. And that just gives you just a high-level view of some of the accomplishments, and basically the board and the staff set out these objectives and then achieved them and just kind of checked them off. So that's a huge part of the strategic planning process, as well as kind of recognizing and celebrating those accomplishments. A few things the board looked at were federal regulatory issues, some of the ASOP changes. These are all things that may be affecting the system, recent state legislation, and the survey of TRS stakeholders, so that included SAM and MFPE, NASBO, and TRS staff and TRS board all completed a survey. And again, those were some very primary considerations of the board setting the plan. And then the organizational goals and objectives, basically, and I'm not going to spend a lot of time here because we'll go through these in the worksheet. Maintain the qualified plan. We've got specific objectives under there, and we'll review those in the commitment worksheet in more detail. And then goal 2, the high performance work culture, we've got some specific objectives there. And then 3 is the communication and outreach, like I mentioned. So that kind of brings us to the meat of the objectives that we're going to review today. Is what we've got is a commitment worksheet. And this is primarily how we make sure things get done. You know, we don't want to have a strategic plan that looks really great and sits on the shelf. We want this to be a living document with things we set forth with accomplishments. So the way this strategic planning commitment worksheet is programmed out is we have the things are categorized by the major goals. So like I said, our first goal is maintain an actuarially sound qualified retirement plan. So one of the things where the TRS system is going to do is conduct periodic tax qualification reviews every 5 years. So that's been done. That was accomplished in the last fiscal year, so we won't need to be doing that again, I guess, until 2026. So we put it on the plan because we know it's something we're going to accomplish. Another big priority in maintaining the plan is addressing the pension study group. And the board and staff are positioned and ready to actively participate in the pension study and to provide information in response to requests and really be proactive in that, making sure that the policymakers have the information they need to make good decisions, and the board is going to be advocating the best interest of the system through that process. We want to conduct an experience study for the 5-year period ending July 2021. And again, that's going to be something we do regularly, right, John?
Every 4 years we do it. experienced it in the previous 5 years. So
Is that in May, did they
they'll
say?
get the results of it.
Yeah.
And so you'll see, you know, the way we have this programmed out, and I should have covered this at the beginning, is we've got the goal, objective, what the outcome is. That's how we're going to measure whether or not we achieved the goal. We established a priority timeline. We identified who's responsible, and then we tried to identify the resources required. And you know, intentionally didn't get too specific with some of these things because these are big picture goals. And Sean and the staff will be responsible for achieving them or reporting back to you on them. And this can serve as a really good tool for periodic board meetings. Where are we at with this? How are things going? And like Carrie said, it's also very helpful to the board and the committee that evaluates Sean performance. This gives us a good benchmark for that. One of the big efforts, obviously, is going to be the information technology enhancements. What we talked about at the board meeting was staff is going to be working on kind of identifying, cataloging, prioritizing projects, and then bringing those to the board and having a good discussion about, you know, how much time and effort we want to commit to some of these information technology enhancements. And I think we had a pretty good discussion for the coming year. I think the staff has a pretty good idea of what the board's intended investment is in IT, and then as additional enhancements and costs come up, we'll bring those to the board. And with that, and part of that would be identifying metrics for certain enhancements where appropriate, and kind of doing a cost-benefit analysis of some of the system enhancements. But I think what the board talked about with that is that there's not always going to be a return on investment with some of the system enhancements. There may be things that we're doing to improve service to members. It's not necessarily going to save staff time or staff money, but members want it. There may be certain system enhancements that are required for compliance. So we probably wouldn't be doing like a cost-benefit analysis in some of those, but if it's like, well, if we automate this, you know, will we save some staff time or can we save some money? There may be some cost-benefit analysis and some of the enhancements there. So pretty much the M-Trust steering team. And Sean, who does that team comprise?
So myself, the deputy director, who's Tammy Rao, chief legal, which is Denise, accounting, which is Nolan, IT manager, which is John Noel, and communications manager, which is Darla. Patrick is the steering team. Can I miss anybody? I think that's it, right?
Everybody except for Tammy is right here in the room.
Yeah, Tammy is actually out of the office today. Her husband has shoulder surgery, follow-up appointment today, so she came out.
Tell her howdy.
Hello.
So yeah, the M-Trust steering team is going to be a kind of a key group responsible for a lot of these objectives. And we do have a few specific IT enhancements that we know is on the horizon, the online retirement application. So, you know, the major enhancements that we know are going to happen during the 2-year period, we went ahead and programmed those out and actually got some deadlines and everything there. Another IT initiative that we know we're going to be working on is a responsive web page improvement concept. So John and Darla will be heading that effort up and bringing some concepts for staff and board review. Another major objective is to continue business process improvements and workflow documentation. So a lot of that will be going in conjunction with some of the IT enhancements as we improve or automate business processes. We'll also be documenting those business processes, doing workflow, and some of those types of things. So there'll be procedural documentation of our business processes, procedural documentation for each team. That's really going to support the cross-training effort that you mentioned. You know, make sure we have good desk manuals and good procedures and everything for staff. We're going to continue the formal strategic planning process. That's something that's been very helpful and successful to achievement of objectives in the performance process. So we'll keep going with that. There's some detailed things we're going to be looking at as far as staff training. One of the things we want to do is remote notary certification. That'll be a major convenience for members. We're going to be looking at some possible ways to improve work processes, possibly requiring employers to do direct deposits, automatic deposits. That's something that we're going to be looking into.
Don't the bigger schools do that already?
Yeah. And I think there's, Nolan, I mean, there's not a lot of people that aren't doing it. Most people are doing the ACH.
Yeah, I would say 80 to 90% are on ACH already.
What is it going to take to get the other 10?
But we do a lot of outreach already, just periodically emailing or discussing with them over the phone if they are interested in moving to ACH. But I can't force them to.
Statutory change.
I'll tell you how brokerage companies are doing it. They're starting to charge fees for continuing to receive paper. It's a real incentive.
Yeah.
Well, I think a legislative change might be in order. I mean, sometimes you just have to force the issue and require it.
Yeah, this is kind of a tough scenario because a lot of the people that don't do that are really small, rural, schoolhouse types. And they don't have staff.
But once it's set up, it's press a button.
Yeah, but when you have a clerk that comes to a meeting once a month, sometimes that doesn't do that.
There's a way around it.
And there's a cost involved too.
Yeah.
You have to have the infrastructure there.
So we'll look into it. Really what we've set forth for the next period is just to do the research. And I think a lot of this is just going to be some legal research on Denise's part and some recommendations on what we can and can't require and if we should maybe have a legislative proposal. So that's something that's on the horizon.
So tell me about electronic notarizations. Is that like me signing paperwork last week on electronic signature type of stuff?
Similar, yeah. So we have on our retirement application and several other forms that requires notarization. We would have staff here at TRS trained so that they can do, whether it be like a Zoom or a Teams meeting, use technology to, because they're all notaries here, but they don't have the electronic notarization credentials. They would just be able to provide that to our members as a convenience rather than them, especially with COVID going on, without having them have to leave their house and go out into to the bank or somewhere else. I mean, for a period of time this last spring, banks weren't even letting you in the
Right.
lobby. So,
Right.
yeah.
Okay, thank you.
Let's see, we're still on our goal for the high performance work culture is the state of Montana, as you may have heard, has a new pay plan, broadband pay plan 25. So staff have been transitioned into the new pay plan, but there'll still be some responsibilities on TRS as far as getting people's pay set appropriately in the plan, evaluating the plan to make sure that we're providing market competitive rates. And that's an ongoing challenge, I think, for all employers in Montana, but particularly with some of the specialized skill sets we require at TRS and some of the highly talented folks you've got here. It's going to be really a high priority to make sure we keep our salaries competitive so we can hang on to people. And obviously, keeping up on our pay plan reduces the risk of turnover or mitigates the risk, so that needs to be a priority as well. We've already talked about this, Sean attending at the school superintendent meetings and if possible or fits with people's plans, having board members participate. External communication staff has been very active at attending educator and legislator conferences and then MASBO and SAM conferences. We're going to continue with outreach to members. I believe staff has been using mTrust quite a bit to generate mailings and get some messaging out, and that was a big initiative a couple years ago to us to get that functionality set up and the organization achieved that. We want to continue with the member surveys. There would seem like there was a lot of comments in there that the members really appreciated the survey, and I think it yielded some very beneficial information, not only for the strategic planning process, but also for service improvement, some of those types of things. And I think it's important to keep in touch with the membership. Another area we want to do is explore discussions of joint issues and topics. So maybe getting, collaborative board meetings or joint meetings with the Board of Investments and the Public Employee Retirement Administration. Sean's going to be looking at determining the level of interest and timeframes for those discussions. And just kind of seeing if those other agencies would be interested in that. But I think that's something that will be beneficial. And then researching retirement options, I think that's going to be something that the system's always doing to make sure that the system's doing what it best can do to be viable and serve members, but also with the pension study, I think that effort's going to be very important too, to be able to provide good information and options of the study groups considering different things to help them understand the implications of those. So that pretty much is the commitment worksheet. I just wanted to see if anybody had any comments or questions. We want to affirm that everybody's comfortable with the plan, both with the review today or your review ahead of time. If you have any language in there that you wanted to talk about, keep in mind we are going to be publishing this on the website. So we tried to strike a balance between being specific enough that things get done and people know what we're doing, but not painting ourselves into a corner with certain deadlines or budgeting amounts or those types of things. So I think that's going to have to be decided as we go and as issues come up, like with the IT enhancements. We're going to have to look at each of those as they come up. So any thoughts, comments, questions?
I really like the idea, Sean, to discuss joint issues with TRS and Board of Investments and Ampera. I think it's time that we start talking with each other rather than acting so separate. We have common interests, what I'm saying.
Yes, we do. I mean, as you know, one of the TRS board members is a board member and Board of Investments as well, so we definitely have a say. There was a time, not that long ago, it hasn't happened since I've been here, but at least once, Carrie has got me again on the board, and I think there was one joint meeting with all three. That's something to talk about.
Actually, Board of Investments.
We went through 2 or 3 years.
At least once annually having a joint, yeah, so that's what we're looking at.
And I did mention one other thing, that this will be kind of tied to the executive director's appraisal too, and so I think the board will be appointing a committee, or have you already appointed a committee?
We have not yet.
Okay, so this will be a great tool for that committee to work with Sean on the appraisal, and I assume we'll be taking care of appointing some folks there, and this will be a really great tool to help in that effort and help Sean and his supervisors establish performance objectives.
And then, like Jim mentioned earlier, this portion of it, especially pages 29 through 31 in your packet, every board meeting we will review our progress towards each of these goals. And if necessary, if something new comes up, we will add it here, or if we decide, well, there's no way we don't want to pursue that anymore, we'll update the status on basically what ends up being a quarterly basis as we for each of our regular board meetings.
Or if you've accomplished it,
Yeah, we'll
you'll
update.
take it off.
Yeah, or we'll put we'll update the date, completed on, so it's clear.
That's a lot of work, thank you.
Yeah.
Really, I mean, when we meet, it's kind of like, he's got notes, and when to see it all come together always impresses me, so.
Thank you very much.
I'm just very impressed with this, so.
And that's the other thing I would ask is if anybody, board, staff, everybody, if you have any suggestions or improvements to the strategic planning process or things that could have been done better, or you'd like to see things done differently or added to the process, please let Sean know so we can continue to improve our strategic planning process as well. So from here, I will work with Sean to implement these edits and finalize the plan. We'll get it published on our website, and like Sean said, he'll be providing regular updates in context to the commitment worksheet as we go through the 2-year period. All right, thank you all. Nice meeting you too. Good to see everybody again. And yeah, Sean, I'll just leave this up if you want to just shoot it to me at your convenience.
Yeah, thank you.
Okay, thanks everybody.
Thank you, Julie.
another time for
Thanks, Helen.
public comment. Seems that you're our only public. Do you have anything you'd like to say?
I mentioned this before, but on behalf of all of our members at MFP, we really appreciate the time that the board puts in to the fiduciary responsibilities you all have to keeping the plan strong. And we appreciate the fact that there's a lot of, this came up in Impera yesterday actually when I was there, that the staff here have a lot of fiduciary responsibilities too that often are not present at other organizations. You know, there's a higher level of attention to detail and of attention to the system's health that that both staff and board members here have as compared to maybe other organizations statewide. And we're so grateful for the time that you all put into this.
Thank you.
All right. And we are now on to our board training, which is our fiduciary training, and I'm assuming.
Oh, well, that was good timing.
Oh,
Yes, we're going
see,
to.
I'm telling
thank
you, everything just
comes together.
full circle.
Denise, before we get started,
Yes.
Dee asked us that we would all just kind of introduce ourselves and our histories a little bit, and which, because we don't know. Do you want to start?
Sure. Daniel Chamberlain, born and raised in Missoula, lived in Helena for 20 years, own a financial planning firm, which I actually sold in March to my undergrad, and I've lived in Whitefish for 5.5 years. And I'm extremely interested in helping this board move forward by potentially serving also on the Board of Investments, because I think at this point in my life I've arrived at a place where I would really like to get back.
I'm Carrie Elliott, and I am a teacher, a longtime teacher, 27 years. I've been on the board since 2004. When I was asked to sit on the board by Judy Martz, I said absolutely. I knew nothing about it. I didn't know a lot about retirement either, and I've learned a lot. I know how valuable this system really is to the state of Montana, and every single teacher that plans for it. I have taught everything K through 5. I have taught music and PE. I enjoy teaching. I don't think I'm going anywhere for a little while. But yeah, I'm from Kalispell right now, live there, went to live there since I was 13 years old, grew up in Anaconda. I don't know if I was actually grown up, but I'm a Montana girl who's been educated from birth to now and haven't gone anywhere.
And she's an awesome chair.
Great as chair. My name is Scott Debs. I'm a retired member from Lewistown. Started as a science teacher and coach, and eventually matriculated into school administration. Was an assistant principal for 6 years at Lewistown, and principal for 15. In the process of all of that also included time as a curriculum director and time as a junior high principal, and found out last year when I retired that I really missed the kids. And most of the parents. But have been on the board for a long time. This is actually my 22nd year on the board. I was actually asked when I was a member of the School Administrators of Montana Board if I would be willing to take an interest in and help pay attention to what goes on in our retirement systems. And I pretty much took that to heart, and have obviously been here through 4 governors.
You've seen the highs and the lows, haven't you?
I've seen the good and bad, yes.
Sarah Hitchcock. Here I'm kind of where you were when you started. This is my first year teaching. Not a teacher by trade, but I'm teaching English at Glasgow High School. Also coaching basketball and track. We've been in Missouri good Lord, I came from Missouri to Montana 2 years ago because of my husband's job. And prior to that, I got a master's degree in public administration, worked for the National Rifle Association, their legislative division, worked for nonprofits. So teaching is new for me. This is new for me, but I'm really excited. It's a lot of fun. I've had coworkers at the school kind of ask you, like, are you okay? Are you gonna be okay? Are you okay? And I'm like, I'm fine. I've actually had a lot of fun. And I think it's pretty neat to be able to come in with a different background into teaching because, I have a very different perspective than a lot of teachers that, went to school to be teachers and were classically trained as educators. I am none of those things, so I sometimes have an unorthodox approach, but seems to be working pretty well for me, and I really enjoyed it. So I really like Glasgow, despite being 2.5 hours from Walmart and 4 hours from Target. So I enjoy coming here.
You're a great fishing girl.
Oh yeah,
Oh, yeah.
yeah. My father-in-law's in town, and so my husband took some time off, and they caught salmon yesterday morning, and have been duck hunting this morning, and then tomorrow's pheasant season. So he's in a happy place. So if he's happy, I'm happy. So.
Very good. I'm Dee Brown. I'm from the Flathead. I was raised in Columbia Falls. I graduated Columbia Falls High School, went to MSU for a while, and I was flat broke when I was a sophomore, so I was a telephone operator for 6 months, made enough money to go back to school, and graduated U of M. I got a master's from MSU Northern in counseling, but I never cared to do that. I always thought my strength was with 25 or 30 kids in the classroom. We also, after I retired, actually during the time I taught, we built and operated an RV park up by Hungry Horse. Sold it about 7 years ago. So I've had public and private sector interests throughout my life, and have a daughter who is an educator, a principal in South Tucson, and just was accepted to Baylor to get her PhD, so we're proud of that. Our son graduated from Raytheon in Phoenix and works for graduated from DeVry in Phoenix, and works for Raytheon in northern Massachusetts, lives in New Hampshire. So I have 4 grandkids. We've been married 50 years, and we went to Alaska on a fishing trip in celebration. So that's my life.
Oh, sure.
Yeah.
So obviously,
I don't know why I skipped you.
my name
but-
is, that's fine. Sean Graham, I'm the executive director here at TRS, and I've been here since, actually, before I go, do you want to have Dan Trost go?
Oh, yeah.
That might make more sense. Sorry.
Dan, would you like to introduce yourself as well?
Sure, yeah, Dan Trost, I am a financial advisor at C.A. Davidson here in Helena. This is a regional firm headquartered in Great Falls, but we now have 1,300 employees and 400 advisors spread across the western U.S. and cool storage in Montana. I have been on the board, I think, 7 years, and I guess I've been surprised by the range of topics and responsibilities. Some of the legal things you've gotten into have been really, really interesting for me. But I've enjoyed all of it, and happy to help.
Thank you, Dan.
Okay. Like I said, Sean Graham. I actually was born in Butte, raised in Divide, which is halfway between Butte and Dillon. Went to high school in Butte, college in Dillon. Moved to Helena when I married a Helena girl, moved here, worked in the private sector for about 12 years, American Chemist Corporation, and then started working in the governor's budget office. I was there for about 5 or 6 years, and then I've been here, the director of TRS, since October of 2013, so 8 years now. Really enjoy the mission we have. We have one of the best missions. I mean, my bachelor's degree is in secondary education. My master's was in business administration. So I was trained to be a teacher. I'm currently the head wrestling coach at Capitol High School, and enjoy my work at TRS because we really do get to do, I think, some of the most important work in all of state government, which is making sure that our teachers and educators have financial security when they retire. So I enjoy my job here at TRS.
And you know, something I didn't mention that I probably should, I was a 16-year legislator. I served 8 years in the House and 8 years in the Senate. And that's actually where I met Sean, is he would come in front of my committee that I chaired, the Sabbath Committee and the Interim Committee. So I knew Sean before this appointment.
All right, Denise, would you like to introduce yourself?
Oh, We don't need to do me, do we?
Yes, you do.
Okay, I'm Denise Pizzini, legal counsel for the Teachers Retirement System. Essentially since 2007, when I first started, I was legal counsel for Department of Admin, and TRS was one of my clients. At some point, it became apparent that there needed to be a full-time attorney here, and I was fortunate to get the position. Like Dan, I love the legal issues we have to deal with here. Grew up in Great Falls, got my undergraduate degree in English Lit at MSU, my law degree at U of M. So I've lived in most of the state, not as far north and west as you, and not as far east as you, but I did spend a lot of time in the Glasgow area on one of our legal issues some time back. So, have a mother from Butte. I worked at D.A. Davidson for a while. I'm just trying to draw parallels with everybody's life experiences here.
Have you been to Glacier Park?
I wrote a book. I did the text on a book published about Glacier Park.
There you
Yep.
go.
Yep.
My district.
Love Glacier Park. So I'm sorry, are we ready to
Yes,
move?
we are ready to move on to fiduciary training. This is the important stuff.
This is
what
the
we
easy
do.
part. So before we do fiduciary training specifically, I'm going to pass out to everybody a revised version of the board per diem election. And Dan Trost, I will email you a copy of it later today. There have been some minor adjustments in the language. It's something that we typically would do with the new board members. They would do one of these per diem elections anyway, but I will tell you what the change has been for the passing that on the table.
Can I add it to my TRS retirement?
Yes.
Well, so, and I don't know if this is something that, I'm sorry, I'm gonna have a propensity to refer to you as Senator Brown, that's
Yeah,
just sort
just
of,
call me Dee.
all right.
Yeah, it's hard to not call you.
So, under state ethics law, as is outlined at the top of this form, if you are otherwise a TRS board member, you get paid per diem for the time you work for us, $50 for each day that you're involved in a board meeting. You also get a $50 fee that is not a per diem for preparation for each board meeting. That is not, you're assumed to do that in your non-regular work time. This really doesn't apply to Dee because she's not currently, well, I shouldn't say that. You may be otherwise employed in public state employment.
I'm out. I'm
Okay.
retired.
Okay. So that $50 fee for preparation is not included, but for the time that you're in a meeting and you're receiving per diem, you cannot receive payment from another state employer for the same period of service. So for example, for today, you can't both receive your regular daily rate from your employer and your $50 per diem from TRS. So you have to make an election on this form to tell us which you're going to do, whether you're going to receive the per diem or receive your regular compensation, and that's something I'm sure you have to work out with your employer. Carrie is sort of, so if you have any questions about that, I'm sure she can tell you how that works. You'll see there are more elections on here, including that you might receive them both and then you have to offset with one, and you could receive both and then you would have to pay that $50 per diem over to your regular employer. And that sort of gets us to the change that was made in here. Dee may be aware of this, but prior to the last legislative session, there was a decision made by the Montana Supreme Court. If everyone who's completed this form before recalls, there was language in here that said, if you were going to do one of the things, if you were going to receive both amounts of money and offset with one payer or the other, you would have to do a periodic filing with the Commissioner of Political Practices if that was the election you were making. The decision from the Supreme Court was that, yes, the ethics requirements, there were prohibition, and it wasn't specific about the per diem election, but the ethical requirements clearly apply to board members, but the authority of the Commissioner of Political Practices as the overseer of those requirements does not apply to board members. A state legislator proposed a change to law that would have added that in, the governor vetoed it. So I've merely modified this form to take out the reference to any reports to the Commissioner of Political Practices. So at this point, this form primarily advises TRS how we are to pay you your per diem amounts, etc. So just quickly, for those of you who are not employed with another public employer, you would mark the first line. If you're going to receive your regular salary from your regular employer, from your school district, and not receive the per diem from TRS, you would mark the second line. And you may not know at this point how you're going to do that, and you may need to speak here.
You may take more than $50.
Sarah, and also, like, I spoke to, like, I've had different school districts, so one school district would not pay me. They made me take my own leave. And then the other one says, nope, we're gonna give you this leave, we think it's good for the state of Montana, blah, blah, blah. So it depends on how, like, I didn't have to take my own sick leave or my own personal leave. It depends on that, so.
I did shoot a message to my superintendent because it was a question I placed. He didn't even know because we hadn't had anybody do anything like this in our school district. And they had said, it looks like I get, this was the question that I haven't been able to follow up on. It sounded like 2 days of temporary leave to do service like this, but I don't know if that's 2 days per year or if that's 2 days every occurrence. So that's what I have to clarify
And it
because
may be
it may
your
be.
contract, yeah.
Yeah, so.
Now, and Carrie brings up a very good point. If you take vacation time or personal leave time under your contract or whatever the case may be, clearly you're going to get paid for that by your regular employer. I would assume you get paid for that by your regular employer. You can keep the per diem from TRS at the same time. If you're using leave time with your regular employer to perform your service here, that's not considered a duplicate payment.
Okay.
Okay?
Okay.
So let me interrupt you for a second. So as Denise was talking, I passed this piece of paper around, and the elections you make on this form then drive this. This is our expense voucher that we use. And for you, Sarah, if we need to maybe not have you fill that out or sign yours until we know one way or the other whether you're getting the per diem or not, we can do that. But if you just look at that, you can see that for all of you, we have the lodging is up on top, but the lodging is also down below because I paid for that on a state card. And so it gets reduced from the total owed back to you, but then you get $50 prep time the day before the meeting, regardless of whether or not your district is paying you or not, you still will always get that $50 prep time the day before the meeting. And then depending on what election you make on that form, you either will or will not get the $50 for each day of board business, which would include board meetings. If you were to go to NCTR, the trustee workshop over the summer, you get the $50 per day per diem, plus meals, whether it's at the in-state or out-of-state rate. We will update that information for you.
So Sean, I have a question there. So I get that $50 and the one, oh, I see where it's calculated, never mind.
Okay, and then the other thing I didn't mention is, and then the mileage, you get your miles at 56 cents a mile. That's
Right.
also included in there as part of what is owed to you as per diem, as the mileage back to your hometown.
As a subtotal?
Yeah, it shows up in that subtotal column, and then it rolls across, and it's part of the total over on the right-hand side. The only thing that comes out of that is if we paid for something TRS did directly, like your hotel room, and then that's listed down below in the bottom boxes, and it comes out as the less total amount charged on a credit card.
And any reimbursement of expenses by TRS is not, strictly speaking, a part of your per diem and not counted with with respect to whether there's a duplicate payment. Reimbursement of expenses is reimbursement of expenses, so. I think that this form, if you need to, provide something to your employer to describe to them what the requirements are, I think the statement in this form should be should handle the issue.
Or call you.
Exactly, absolutely.
Yeah, or we can go back and call the superintendent before you leave, too.
Yeah.
Do you want our social security number on here?
No,
On that form, no.
I'm sorry. I thought you were,
On his one?
No, you don't need to do that. I think you'll provide that on the W-9, did you not? The one that.
Yeah.
Yeah, so I don't need it there.
Okay.
I just need a signature on the bottom and everything looks good to you.
So then if I want to, since I didn't have to take personal time, this was, I'm being paid my standard wage for today, I would elect the second one, and then that 50 would be deducted from
Yes.
this. Okay, so I think that's where we're at then, for now at least.
Okay,
So
and we can update that.
Okay, yep, that sounds good. So I won't sign that then, but I'll go ahead and sign this.
and if, as you talk to your employer further, if the preference changes and they're just going to pay you and you're gonna forego the $50, I mean, if you can do another
Okay.
one of these anytime.
Sure, yeah, I just need to clarify with him what he meant by the 2 days thing, 'cause it wasn't clear on, yeah.
You mean if I go
Yeah,
back to work?
Yeah, per contract,
Yeah,
or,
right,
I don't, so, I wasn't quite sure.
Some of that stuff is all tied into collective bargaining.
Yeah.
Right.
Every school district's.
Right.
Yeah, I saw that.
So I'm sorry, Madam Chair, are we ready to?
Yes, I think we definitely have.
Move along to fiduciary duties, okay, I'm gonna tell you up front that, in the greater scheme of things, this is, you would both have in your sort of board orientation material packet, you would have received, the document you received would have a link to this document, as out online as well. This is fiduciary training, this specific thing that we go through, not really even every year, but every year we we have a substantial ethics and conflict of interest policy, including an annual statement that you have to complete and sign regarding any conflicts of interest that you might have, to provide notice of those things to the retirement system. So this is sort of the overview training. Certainly you'll ask any questions on that you have, but we typically do that more in-depth training, which is substantially fiduciary duty related, right? Ethics, responsibilities under state statute and that are substantially similar to common law fiduciary duty kinds of considerations, either in December or February, Sean. I'm
December
sorry,
1st, I think we're coming in
December.
for that, aren't we?
For
Well-
which, yes, for the orientation?
You're coming in for the orientation, but I mean, the whole board will go
Oh,
through
gotcha.
Oh,
this.
that's,
Which one are you
It's
asking? I'm just trying
the
to-
annual ethics training
It's
and,
it's either December or February. It
Right,
depends. I
right.
have a schedule to make sure we begin it each year.
all right? So we'll start and we'll get fairly quickly through this and, those of us who enjoy the legal issues, Daniel. Fiduciary duties come from English common law. They were the equity law, the basis of equity law in Old England, and came to the United States as part of our legal code. They are one of the oldest fiduciary duties, and fiduciary requirements are one of the oldest sort of standards of law in American law, but it's also quite nebulous. I mean, it's more of an art than a science, but it has a lot to do with plan governance for pension plans and that, and it is all about, when you go to NCTR and those sorts of things, you'll hear a lot of talk about plan governance, fiduciary policies. You will find a lot of systems that have fiduciary counsel, fiduciary attorneys under contract. I am not, strictly speaking, a fiduciary counsel, but We don't have one, we don't keep one under, we don't have one in general. If we needed one, we would engage one. But for the most part, fiduciary councils attached to pension plans that do their own investment, because as we go through this, it'll sort of become clear that the greatest arena for fiduciary issues is probably in investment management for pension plans. That's not to say they don't exist elsewhere, but. So a fiduciary is a person to whom property or power is entrusted for the benefit of another. So for example, just a standard power of attorney. The person who holds the power of attorney, the attorney in fact, the agent, is a fiduciary for the principal, the person who gives them the power of attorney. A trust is a legal arrangement where property is held by one person for the beneficial interest of another person. Clearly, you can see how that relates to TRS. Our trust funds are held in a trust. You are the trustees of the trust. Fiduciary duties absolutely clearly apply to you, not just by application of common law standards, but because our state constitution says that you act in the capacity of fiduciaries for plan members and their beneficiaries. We also have to comply with IRS qualification standards, and they are, many of the qualification standards the IRS imposes are substantially fiduciary precepts that, as we will go over here. The comment was made earlier about the fiduciary status of TRS employees. Strictly speaking, legally, a fiduciary is somebody, the legal standard sort of is, somebody who exercises discretion over the distribution and expenditure of the trust assets. Now, that certainly does not mean that doesn't apply to some of our staff. Certainly, our deputy executive director exercises discretion in certain circumstances. Probably in certain circumstances, I do as well. For the most part, the rest of our staff are performing duties and functions that they are trained and obligated to perform in line with their job duties and obligations, but they're not independently exercising discretion with respect to who gets benefits, at what level, those sorts of things. So that's not to say, and we will go over it when we go over the larger ethical training in that, all of our staff is trained to understand the board's fiduciary obligations and to act in conformity with those. So it certainly is an obligation and an understanding that we, take right down to the grassroots at TRS, even though everybody is not legally speaking fiduciary. Fiduciary duties and responsibilities and obligations are legally placed upon fiduciary to ensure that the benefits derived from the trust assets flow to the beneficiaries of the trust, and not to other people, including the fiduciaries of the system. And again, in most public pension plans, the fiduciary case law is sort of conglomerated around people with pension, investment responsibilities, and things like almost like insider trading. If you invest heavily in the stocks or that you are purchasing or divest yourself of things, those things become issues. Not for us, because the board of that would be the Board of Investments problem, not ours. But anybody who's, whoever the TRS board member is who sits on the Board of Investments as well, I'm sure will get substantial fiduciary training along those lines as well. Fiduciary duties are applied and enforced in a couple of ways. Sean mentioned earlier, and it was part of our strategic planning thing to talk about our qualification reviews. That means whether or not we're complying with the IRS qualification standards as a tax-qualified pension plan. Statutorily, we're required to be a tax-qualified pension plan, and to not be a tax qualified pension plan would be our members would have to claim and pay taxes annually on the increased value of their benefits year over year. It,
investment taxes as well,
we might.
It's not a good scenario.
It is not. So the biggest impact would be to our members. The biggest detrimental impact would be to our members. It would just not be. So the IRS up until 2013 had what they called, they became very involved in pension plan, governmental pension plan qualification reviews around the time I got here to TRS. Before that, they assumed as a governmental plan you were tax qualified. Then they started a letter review process where on a 4-year rolling basis you submitted documentation to them, all of your plan terms, which are statutes and administrative rules, and they reviewed them to make sure that you had all of the required provisions in there, such that you were, and of course the expectation is that you're administering your plan in conformity with your plan terms, and they gave you a letter saying you appear to be a tax qualified plan, and you could rely on that letter unless you made substantial changes to your plan terms.
And how many administrative rules did the board have to change, or were they good to go?
Well, that's going back all the way to when I got here. I will be perfectly honest with you. We made a determination quite some time back that with respect to complying with qualification standards, we typically do it through legislation and not through administrative rules. So we have certainly made changes to comply with those. In 2008, we published a substantial list of administrative rules at that point. I was just getting here at that point to comply with specific IRS requirements, but we don't do a lot of rule changes for we do rules to clarify how we apply our statutory requirements, not necessarily to comply with qualification standards.
And we have not promulgated an administrative rule since I've been here, and that's 8 years. We're about to do some rule revisions, which is mostly getting rid of things that are obsolete.
Yeah.
Things that have been replaced by those
That's been going on for
Right, everything we've done has been through the statutory process, legislative changes.
So we have the audit process, the reference in our strategic plan now, the IRS stopped its qualification letter review process. I want to say in 2013 was the last time we submitted a qualification application to the IRS. Most recently, we contract with tax counsel, the Dice Miller firm in Indianapolis. They do public pension plans across the nation. They are very good tax counsel specific to public pension plans. They have a process where they will essentially do the same review that the IRS used to do as a paper compliance process. And that is in the strategic plan, that's the reference at this point. There's a possibility, there's been talk over the last few years that the IRS will bring back the qualification letter process. Of course, if they do that, we'll be participating in that process again, but for the time being, our qualification reviews are done by our tax counsel. You also always have the possibility of an IRS audit. They're very uncommon. And they're very uncommon in public pension plans, but they're not unheard of. And like I said, I go out occasionally and look at they put out a field representative manual that tells them what the issues are that they're to be auditing for if they're looking at a pension plan. So, and those will generally really clearly track what comes up as NAPA as issues for you to be, particularly making sure that you have these tucked away. So, no audits, and there won't be any. The other option is legal actions, and we have not had any fiduciary duty legal actions since I've been here. Although at the time that the crash happened in 2008, and by 2011 or that, there was no legislative fix to them. We got letters from some people threatening to file a fiduciary lawsuit against us if we didn't sue. It's not outside the realm of possibility, the notion of fiduciary lawsuits. Again, that's
Do we have indemnity?
So, as board members, you are employees of the state of Montana. You are covered for your actions as board members by the same insurance through risk management that state employees are. In the fiduciary world, you have to always be aware of sort of the notion that you're covered for your conduct as a state employee individually to the extent that you're working within the parameters of your duties and functions with what you do. If you're defrauding the retirement system, you're outside of your, you know what I'm saying? So what fiduciary duties apply to TRS board members? The first one is the duty of loyalty, and I'm just going to tell you, I'm going to try to consolidate some of this now. The duty of loyalty is, in IRS terms, called essentially the exclusive benefit rule, that both of those essentially say, again, that what you do on behalf of the TRS board, you do on behalf of TRS members and their beneficiaries, and on behalf of nobody else. Your primary objective, and that is not to say that we're not always concerned with what the taxpayers pay, with what what happens to the retirement system happens through legislation. So we don't live in a vacuum, we don't live in a bubble, but as board members, your first imperative is the best interests of all of the members of the retirement system. And that's codified as well in our statutes and in IRS qualification standards. The duty of impartiality is just that issue that I just pointed out. It is not each individual member. I've actually been in contested case matters where an attorney has said to me, your board has a fiduciary duty to do what's best for my client. Well, no, my board does not have a fiduciary duty to do what's best for your client as divorced from what's best for all of our members and beneficiaries. Right. And the duty of impartiality also means that what we do for one person, and this is part of internal staff training and that sort of thing, is that similarly situated people get treated the same. And nobody gets better benefits or better treatment than anybody else because they're a squeaky wheel or whatever the case may be. Right? The law is the law, and people are entitled to the benefits they're entitled to, and that's what people receive. Now, this number 3 is an important one for you, the duty of delegation. Under TRS statute, you are required to employ an executive director and other staff to manage the day-to-day operations of the retirement system. You are also working under sort of the prudent person rule under the Montana Constitution and IRS qualification standards, which says that you have to exercise the duty and care in administering the retirement system that a similar person engaged in a similar undertaking would exercise. There are states that have something that's called the prudent expert rule, and I'm not sure whether BOI works under the prudent expert rule or the prudent person rule. Again, if you're on that board, you'll get. But the prudent expert rule says that you have to perform the duties and functions that a prudent expert, somebody who's expert at administering a retirement system, would do. The standard legally actually sort of becomes a hybrid of that. You are deemed to have greater knowledge and expertise in the management of a pension system than the average person walking on the street has, and you have to act as board members on that basis. To some extent, that's why and I'm sorry, I keep looking at the two of you, mostly
Because
because
they
it's
already
me.
know what's going
We've already
on,
been
and
eyeballs on this.
That's one of the reasons it is the requirement that you attend training as specific to trustees of the retirement system. It's not just because it's a nice thing to do, it's because it helps you comply with your fiduciary obligations. It helps you develop and maintain the expertise that makes you a competent fiduciary of the retirement system. Most pension plans, their governance plans mandate board education on an ongoing basis. We don't have a requirement, but it is certainly built into our internal practices. We engage a number of other experts. Our actuaries are one, our tax counsel are another, who have specific knowledge. You're not deemed to be actuaries. You're not deemed to be tax counsel. You can rely on, you can delegate your responsibilities in those areas, so you're not expected to be experts. But you do have an ongoing duty to delegate to competent, qualified people and then to supervise their conduct of business on behalf of the retirement system or oversee their conduct of business. That includes all of your staff here. So that's all built into the process as well as we go along.
Denise, just a point of clarification. So, for example, if we were to delegate a certain aspect of our functioning, like the auditors, and they gave us specific recommendations on how to change our system, and then as a board we elected to do something entirely different, that would be a delegation of fiduciary responsibility, correct?
So you mean the actuaries?
That would be an example. Well, okay, so let me try to be specific. If we, which we have, delegated our actuarial observation to that organization, and they were to tell us that we needed to, for example, definitively raise employer contributions in order to keep up with our actuarial strategic goals. And as a board, we then contemplated that and said, no, we're not going to do that. That would be a delegation of fiduciary responsibility, correct?
Well, one might say that that's an abandonment of fiduciary, but that's...
Excuse me, I used the wrong word.
Right. I mean, engaging actuaries to make the determinations about what your assumptions are is the delegation of fiduciary duty.
Right.
Not doing what they say needs to be done, but there are a whole lot of things that go into that.
Sure.
So, I mean, there are, so you're exactly right. You are ultimately the people responsible for the assumptions for the retirement system, and making a determination that is not entirely in keeping with what the actuaries recommend is not necessarily a violation of your fiduciary duties. But I don't think we've ever seen a circumstance or anticipate seeing a circumstance where that's...
I guess the point I'm trying to make is it could theoretically leave us vulnerable if we were to do something diametrically opposed to the expert advice that we're contracting for.
Yeah, absolutely, unless you had a very good reason and you document that, and that's one of the points that's laid out in this as well. For fiduciary duties and that sort of thing, the process is important. The conversations you have in these board meetings and that it's videotaped, thanks to Senator Brown. It is important because it's important, as it is probably more important to have a good process than it is to have a perfect outcome. If you're doing what you're supposed to do and you're making well-reasoned determinations and that sort of thing, you're going to survive a fiduciary claim against you, even if it wasn't the best decision that could have been made, right?
But if we hire experts and their past history has shown that they weren't as expert as they thought they were, then could we stray without much ballyhoo?
I think in that scenario, we'd probably be remiss to make a decision without incorporating other experts
Yes.
to back up what you're doing.
Well, and the other thing to keep in mind is that this board, who you engage as experts, whether it's your actuaries, your tax counsel, that sort of thing, you will see those contracts come up to you. I mean, the board is who approves those contracts and signs them.
My name's on it.
It's all Carrie's fault. No. So, I mean, you have the authority in a couple of respects. I mean, again, you can make determinations different specifically from what your experts advise you to do. You're going to want to consider the whole world of facts and circumstances, but you also get to decide who your contractors are. So, and with that being said, I will tell you that our actuaries are one of the entities that are exempted from competitive procurement. So when you see those contracts come up, whenever the term of the current, we're not going through a competitive process for those. We did go through a competitive process in 2009. That's when Kavanaugh McDonald came on here. I mean, so if you have concerns about the capabilities of your contractors, you're going to have an opportunity to discuss those.
We actually had a real world scenario several years ago where we had contracted with an attorney to help lead us through remediation. And his advice was not taken by the board because we did not feel that he had enough information of the big picture to be providing the counsel that he was providing, and we chose to move in a different direction. But it was because of that responsibility that we were willing to take that step forward and say, no, we don't believe that's right at this point in time. And so as a board, we moved off of that recommendation that he had made.
I think it's always in the best interest of our members and our clients.
And it would have been detrimental had we not.
We won that case.
Yes, in a big way.
So we choose our lawyers more wisely? Is that what you're saying?
We have since then, yes.
And on that point, I will just throw out that as another contract that you will see. I am the only in-house counsel for TRS, and because legally there are precepts of due process, and that I can't both, and I use this term and I always put air quotes around it, I can't prosecute the case, a contested case matter, on behalf of the retirement system, and then simply turn around and tell the board, do what I said, right? You have to have some independence from TRS staff's conduct in a contested case matter. So the board has contracted for the services of a law firm here in Helena, the Drake Law Firm, to act as your legal representatives and advisors when contested case matters. And there's, in the materials that were sent to you, there's sort of a more voluminous description about how what the contested case matter process is. And so, I mean, even to the extent that when we are in a contested case matter, when somebody has invoked their rights to a contested case process, the Drake Law Firm gets called in and they are your legal counsel. If you have questions about the case, you direct your questions to them. There's actually a legal prohibition against you talking to me or internal staff about the facts or law related to that case. So, quickly jump to conflict of interest. Fiduciary duties clearly are, and the issue of conflicts of interest, if there were a conflict of interest, you would be violating your duty of loyalty, the exclusive benefit rule. A conflict of interest would mean that you are acting as a TRS board member, essentially. Well, a conflict of interest occurs if you as a fiduciary have a personal, professional, or commercial interest or relationship that might reasonably be perceived as diminishing your independence of judgment in your conduct of TRS trust business. So, you can have an actual conflict of interest, which means you decide as a board to engage a law firm to represent the board in contested case matters who's your son-in-law. You cannot do that. It's an ethical violation under state statute. It's a conflict of interest. So that's the bigger training, a lot of the bigger training that we're going to go through in December or February, and the statement that you're going to complete at that point as well. You can also have a conflict of interest that is a perceived conflict of interest, and oddly enough, we don't have any disability applicants this time around, but it's the most common circumstance where you're going to see sort of the notion of a conflict of interest. Those of you who work in public education or have worked in public education, it's not uncommon for somebody to file an application for us for a disability retirement benefit. The board makes all final determinations on disability benefit applications with a whole lot of help and background information from TRS staff, medical reviewer, etc. But you make the final call. When we have a disability applicant or more during the board meeting, I will show you their name, show you their school district, where they live, that sort of thing, and you're going to tell me whether you know the person, and then if you know the person, you know, what kind of relationship you have with the person. If it is, and in fact, in most places, if a board member knows the person and is familiar with the circumstances of their disability application, they will simply say, the determination is fairly simple. Let's call it a conflict of interest. I put a statement on the record that you have a relationship that could be perceived as a conflict of interest, in which case you neither participate in the conversation about that disability applicant nor vote on it. So the disability applicants are the easy part. The other things like the contractors that we do business with and those sorts of things are a little more difficult. So again, we'll go through that training. If either of you is concerned that you have a conflict of interest right now, you can certainly call me and let me know at any time and we can work through it. But that's sort of the thing. If you have an inherent conflict of interest that cannot be remedied by putting it on the record and putting appropriate safeguards around it, like you don't participate in the conversation and you don't vote, then the conflict of interest either has to be made to go away or you need to be not on the TRS board. Just to put it very simply. It's one of those things that will get you into trouble. It will get you into trouble independently, and will get the board in trouble as a whole. Fiduciary duties are also the one thing, and I love when, that you're teachers. When I tell you this is the one place where it's not, you don't say, don't be a tattletale. As a fiduciary, you are obligated. If somebody else is violating their fiduciary obligations and you are aware of it, you have to bring it to the attention of the board as a whole. You cannot keep it to yourself. That makes you are equally liable for the harm that's done. You can personally be required to repay the system for any losses that occur because of that fiduciary violation, that conflict of interest. And that's where you're going to be getting your own counsel to represent you independently. And again, after I say that, staring you in the eye, it's never happened and we don't anticipate it ever will. So, Do you have any questions? I mean, sorry, that was all probably clear as mud. It will be exhaustively discussed in a couple of months.
I guess the only other time I ever had anything that I wondered or questioned about was when we went to the NCTR. Certain firms will sponsor a wonderful dinner, and, you know, we're expected to go to these dinners. Is that too much of a gift? No, it isn't. So those were only my only questions in there.
Yeah, and gifts are frequently the thing that comes up. Attending a sponsored dinner at a public, at a conference or something like that. I agree with what Carrie said. I'm going to throw the caveat out there that if it ever feels to you like somebody is leveraging something that they're giving to you for better treatment, I would avoid it. I mean, a $100 charge on your credit card to pay for your own dinner is not, not worth the potential. So,
Like if a new group of fiduciaries came along and had us all privately to a little dinner, so they knew their contract was coming up and they wanted to be hired, that would be not good.
Correct. I actually had a scenario where we had an IT project going on that was failing. And one of our former IT employees was working for a company trying to fix that. And he was more than willing to do all kinds of stuff to make sure that his voice was being heard.
Yeah, the biggest thing.
Those things crop up occasionally.
Usually,
Pretty rare, and anytime you ever have any question at all, if you can either ask me or Denise, either one of us, will steer you in the right direction.
and I'm sorry, I failed to mention one of the things that always, and you will hear talk when you go to conferences and that sort of thing about whether it's appropriate to have people who are beneficiaries of your system serve on your board. Under Montana law, it is very clear that is not a violation of your fiduciary duties. You can advocate for your own rights in the retirement system as any other member could, not at a board meeting, but just as any other member could, correct? And you're not violating your fiduciary duties to the retirement system as long as your interests are commensurate with every other TRS member's interests in the retirement system. It is not, there is no fiduciary duty implication of you serving on the board and being a member of the retirement system.
so she wouldn't get extra benefit. If she started saying, I want extra benefit, then that would be bad.
You'd have to pass a law. through
Yeah.
legislation.
Just for yourself.
Sounds like a really good idea.
Special treatment.
Yeah.
So, yeah, that I'm talking about.
Yeah.
So I'm sorry, any other questions, any?
We'll have some by December, I'm
Yeah.
sure.
That's right.
Denise actually does a really good job of reminding us, whenever we're going to get into something that might be a little bit slippery, she does a pretty good job of reminding us.
Especially it's hard when she's our attorney and we can't speak to her as an attorney and we have to use another, there's confusing things that happen along the way.
Yes. When we're in a contested, when we have a contested case going on, and I do legal update at every board meeting. In fact, is that up next? Should I just? It's not.
Because, yeah,
It's
applications.
Oh, yeah, sorry.
You
I
can
will
just
stay
there,
sitting
though.
here.
You can just stay there though, because the next part here, and that was just a discussion item too, as you can see, we didn't have a lot of action items, but we do need another public comment. Is there anything you needed to say? I love when we have public comments. And then, so this is the applications and benefit adjustments, and this is an information item. What we get here is a list of who has applied for retirement benefits within the last quarter. And so this one, am I correct, Sean, is our big one. So this is the last year, people who retired at the end of the school year. And they're broken apart by school district employees.
Tab?
Sorry, behind tab 8. school district employees, it is, there are universities sometimes.
So this is the time period 4/1/21 through 8/31, and our majority of our retirements occur in May, June, and July. So this is the big roll-up of all of our retirements from last year for the most part. There's some summary information towards the end. We had 462 school district employees retire. The average age of 61.23, average service 24.67, so on and so forth. Now, the one thing I did want to speak to the board about with this report in particular is that we currently we put up our board packets prior to every board meeting, and they reside out on our website forever. But I always remove this section from the public version just because it does provide the person's name, and if you are familiar with how our school districts are numbered, you can figure out who they are. It doesn't necessarily give real benefit information. It talks about their term pay amount.
What does term pay amount mean?
So that's the
Highest?
unused sick and personal days, plus maybe a retirement incentive if your district has one. If they take term pay option 1, that means they take that amount of money that's listed in that column and they add it to the 3 years to make up their AFC, which enhances their benefit. Option 3 would be don't use it at all. So anyway, I guess long story short is we could change this report so that it doesn't include names. We could just use their TRS member ID, which means nothing to anybody else except for the member themselves, and not include their name, and then I can post just the exact same packet on the web as what you're looking at, but I don't know. I know the board in the past has said they'd like to be able to look through this.
This is one of the few times where we actually are able to connect the dots a little bit with that fiduciary responsibility and actually see what our membership is like. So having a name, in some cases we might know a person, in other cases we might not, but there's not enough information for us to cause a problem. But it is really nice to know service and term pay kinds of things later on, to have this kind of accumulating in the back of your mind. So when you see some other aspects of that, you have a better feel for what that's going to mean in terms of benefit and how that plays out.
And Sean, that might be something that could be put on the website, is the, not with the names, but in the last fiscal year, so many people retired, the average amount of service is this, and the average amount of term pay is this. I mean, maybe that would be something.
Yeah, I mean, and those are certainly things that are included in our valuation that we could break out and put as more summary type information, for sure. And then, so I guess on pages 66 and 67, you have kind of the roll up, the bottom of 66, their total recipients for regular school district, which is SCBI for employer, 462. STAG is state agencies. There weren't very many of those. There's only 3. Average service 28 years. The average age 67. And then university, there weren't very many. We're down to around 250 active members in the university system. So each year, there's fewer and fewer of them.
Okay.
They tend to have a little bit higher term.
Yeah, and service.
And service, yeah. Easier job than 4th grade.
They seem to last longer.
Yeah,
yes.
they do.
Yeah.
When they don't want these kids in their face, they can just say, go away. All right. Now we're on to the legal counsel report, Denise.
All right, thank you, Madam Chair. I really have, my legal counsel reports have become primarily a status update or an indication of contested case matters that we have. And once again, we have no contested case matters. And don't see any on the horizon at this point, which is always a good thing. So I don't have an update to give you on contested case matters. I will just reiteration, this goes back to the fiduciary duty thing, and Carrie's prior comment. When we do have a contested case process going on, I give a status update on the status of the case, whether it is pending in district court, whether we're in mediation, whether we're in the briefing schedule, I will give you, I will not tell you what the issues are, facts and law, and that sort of thing. That's covered by that. Ex parte communications, thank you. Counselor. Ex parte communication prohibition, but you will get status updates, and as Carrie said, it's sometimes been very difficult not to ask the questions you really want to know about the, what's going on in the case, but I can't have that conversation, so, just so you know. If you want to hear other things from legal counsel, most of what I do as legal counsel, I do as a subsidiary to the operations and business functions that are going on internally, or as part of the strategic plan, like the administrative rule review and revisions and that sort of thing. I don't give you a full update on what I do on an ongoing basis because it's subsidiary to the other things that are going on, and it's not of independent value. That certainly can change. I leave that to the board. But that seems to have been sort of the preference at this point. So, all right.
Thank you very much.
Thank you, Denise.
That was another information item. So we are on to the election of officers. The first thing that we need to do as an action item is elect the chair and the vice chair. I am currently the chair. Scott is currently the vice chair. We've traded a number of times. And
I move that we re-elect you both immediately.
I second that motion.
It's been moved and seconded. Is there any further discussion?
I get the better end of this deal.
Yeah, I was going to say, you want to switch?
You didn't say swap this time, did you?
No.
Okay.
No, I know Scott doesn't really want that responsibility.
So the motion is to keep the same chair and vice chair, correct?
Yeah.
Yes.
Been moved and seconded. Any further discussion? All those in favor indicate by saying aye.
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 Any opposed?
Interested.
All right. And chair votes aye as well. The next part, though, is important as well, and it's our committee appointments, and there are 6 of us on the board, and there are 3 committees. One is the Budget and Audit Committee, and currently it is, who's on Budget Committee?
Dan.
So Dan and Dan are on that committee. Personnel and Policy was myself and Janice, who's no longer, you took her spot. And then Legislation and Litigation was Scott and Jeff, correct? So we can mix it up. We can, it's kind of what you're interested in. I enjoy doing things with personnel and policy. I like working with the staff, things like that, so that's what I've kind of done. But you guys, he's good about working with the legislature, so.
I've done personnel and legislative. Probably.
You're great at the budget.
Madam Chair, it might be informative to have our new members say which committees they think
Yes.
they might be most useful on.
My wheelhouse is definitely legislation, because I know all the players.
We suspected that.
I would probably be better in personnel and policy, probably.
I move that the Budget and Audit Committee remain the same, and we add Member Hitchcock to the Personnel Committee and Member Brown to the Legislative Committee.
Second.
It's been moved and seconded. Is there any further discussion?
Question?
All those in favor indicate by saying aye.
Aye.
All right, so our last thing is adjournment. Thank you, Dan. Our last issue here is adjournment. We just need a motion to adjourn.
So moved.
I'll second that.
All right, moved and seconded. All those in favor indicate by saying aye.
Aye.
Aye.